Good morning, everyone. This is Rose. Today is Wednesday, April 24th, 1 minute after 9 a.m. Eastern Time. We have a ledge top, identical is minimum, 3 identical highs is at the open. Right now we're at 51.0975, 51.10. So we're right around the close of yesterday. We're probably going to go and test that ledge at the open, but we'll see. I have some important levels marked on my chart. Okay. That's yesterday's low. That's yesterday's close. That's yesterday's high. This is yesterday's open. So what I'm going to do with this, I do pay attention to it. I'm just going to float this around here for the bar one, but this, I'm going to lower the opacity, but I still will pay attention to yesterday's open, except it's not in the right place. Problem here is that you can barely see it, so let's just make it a little bit more visible. Okay. Just waiting for markets open, but let's talk about what has been happening in the markets. So we have had this tight bear channel down with several legs down. In fact, then this channel right here is you get a channel up, you get a channel down here and another one down here. Is strong sell-off, could be a deep pullback only market. May sell and want to test these lows. So anybody sold above Friday's high, April 19, is kind of got trapped there because it didn't really sell that much. You don't have an inside bar, but it's kind of disappointing for bears that they couldn't get the test. So they're now forced to sell higher. Now, where could that be? It could be right around here. So you have a sell-off follow through, but it had to make some kind of a double top lower high. It might need to test there, especially the high of this bar. If it does test there, okay, then it can then come back down. Okay, so but then we need a higher low. So if we go there, I'm looking for, oh no, I need to fix this. The monitors are not syncing. Okay, give me a second before I go any further. Just give me a second before I go any further. Just give me a second. I'm going to put you guys on mute and disable the screen for just about 2 minutes. Just give me a second. Okay. Just waiting for data connection to be established. In the meantime, let's go back to where we were. All right, so it's anyone who sold above there, they're going to be scaling in higher. Could be around here. It could be this leg's 50% area, which is right around here. Or you can take the whole thing and just find a 50%. That could be somewhere underneath this day's low. So we could actually, bulls seem to be trying to close the gap here, but I think right around here, but sellers might be waiting. Really strong day, closed pretty bullish yesterday. So except that it went into a trading range, but it closed above the EMA. Now, can we get a follow-through? We probably will get some kind of a follow-through. Possibly market could go and test around 51.18, 51.20 area, is maybe even higher. That's around here where I marked 22 maybe. and then come back down. But that would put us into a trading range right here. So what does market want? Well, pretty tight bear channel here. Market probably wants to come back down, but what I'm looking for is if there's anybody who wants to keep selling this, we need to make a little bit of high, trap, right, come down, make some kind of higher low. We might go back up, but if we cannot make a new high, we could end up, we could make a new high. That would be wedge top at the EMA. That's fine. But sometimes you get this, right? So market goes to the EMA, comes back down, EMA starts to come down like that, and it goes back up. Everybody starts to buy it. Only there are sellers could sell, and we could come back down. But that would give us a leg 1, pullback leg 2, pullback leg 3. Then I would look for failure patterns for reversal. So that could put us into some kind of a trading range. Okay. As far as the catalyst, there's nothing today that we have to worry about. There's a 5-year note auction at 1 and then 1 p.m. I don't think it's a big deal. If you're trading oil, you might get a good move on the oil. The status report inventories will come out on 10:30 a.m. Eastern time. So and then 8:30 durable goods came out, but it is making some good move down on the 5-minute charts, starting with trapping the bulls on the 5-minute ETH, and it has already moved let's see, I think about 15, 16 points it moved. It's just making a decision whether to go up another 5, 10 points or just move up 5 points and then do a double top and then sell back down into the 20 point. 20 point for bears, they can sell the pullback. That would bring them to 1505 area, and we could test the 1505 and then finally bounce from there. So right now they're scalping a little bit on the ETH 5-minute if you're following along, but it is a bear flag. It's a bear flag of this kind. Okay, pull back. So I generally look for one more and then reversal back up, but somewhere around here we can make a double top and then come back down into that area I talked about, which is 5105. Okay, that's what I look to see, a trap and reverse back up, but we'll see how that goes on the 5-minute. So how deep is this pullback? We do have a gap here. That gap right there is kind of significant. Today could be a follow-through day. Okay, I think the bears will try to keep this gap open. Even if we don't touch it, everybody starts to sell. That could be a trap, and the bulls would get another leg up. These kind of gaps, I look for follow-through buying. Okay, if it's bullish, then I would look for a double top of wedge top of some sort. Then I look for a lower high. Then I sell into these lows. Okay, but we could go and make a new low and then trap and go back up again. So that could create a trading range. So you need to be careful there. Just want to talk about one more thing. I had an outside bar. I had an inside bar, outside bar, inside bar, right? And you needed a bull bar closing on its high to buy above it to go test these highs. When an outside bar is this big and it's a bear bar, I look for traps up here. I don't buy, especially if there's a gap here, right? There's a bit of a gap. No bull bars are closing for me to say, yeah, maybe I can buy and scalp at the highs and look for a reversal back down. We don't even have that gap actually closed. You see this gap right there? From there to there, even slightly there, but look, the bears actually did close a bear bar. There were bears waiting, okay? Bulls were not ready to buy. If anybody bought or tried to position themselves with a buy order above this inside bull bar, and then move their buy stop order above this day, they got trapped. Why do you think this bar is a pin bar? It was a bear bar at one point, but it ended up closing up. Why did it close like this, but not some other shape? Why is this bar the way it is? It's so simple. if you follow the price action, right, anybody bought here, trapped, right, seeing a very weak bear bar, thinking they can put their stop down here, got trapped. So they bought immediately at the lower third or at the open of the bull day, and then immediately fix their trade, right? So if they fix their trade, that's fine. But the problem here is that the bar, okay, is, did not close above the high, okay, of this inside bar or that bull bar. Is therefore probably sellers will sell again. Selling was pretty intense. So because there were sellers, they were making money, so they probably added their positions. And even though we went back up, but that's just a bear flag. So you have a double top, is lower high, right? Neckline, double top, lower high, neckline, right? So is underneath the neckline. I don't know who's waiting there, but there are a ton of bears waiting there. They're looking into entering the market, but no bear bars. So some will wait for a good bear bar signal, such as this one, and they will sell under. It's kind of late in the game selling that. But if you do trail your sell stop and end up selling underneath this bar, disregarding the way it closed, you're going to get trapped, okay? Because bulls are clearly trying to exit out of the market. They endure this, but then it continues to sell. So those sellers are in. There are more sellers in here. Stops are up here. So you got a really nice trading range structure. Project it down, you get a measured move. Okay, so I would, if I actually take this, I could take that. Stop goes there. That will be my measured move. But there's a much better continuation signal. If I move it down there, I'm looking for follow through. We never got to that because it's kind of second time you're extending to get a much better price. Okay. Or the best way to do it, you could just simply measure this leg, strong bear bar. I generally do that just to get an idea where can I take profit and then leave a runner to see if it actually continues down when I see something like that. But anyway, but in this case, I measured this and a breakout, that was my target, that was a target, that was a target. So I'm following alone with the market bears, but I'm also now looking for, because it moved enough to say into this tight trading range, support here. So I know this is support, but I'm looking at what I measured, which is right here. So either it's going to keep moving down or it's going to reverse. So we don't have a bear close. It looks like a bear close, but really you should think of that as not. And finally, it just goes back, pulls back there, right? It tests it, and then it closes. So it opens here, comes back down, goes back high, and then closes right in the middle. Then the next day, it gets above it. So market is probably trying to go to this line now. If it move above it today, that means if we get a bullish day, market will continue to go up to the EMA area or this low EMA, but there's a high chance that from that low to that high, this is a gap. We're going to have a rude awakening, okay? I don't think the bears are going to allow this to close very fast. So we're probably going to test it, right? Many bears will sell it strong. I wouldn't do that. I wouldn't sell it. And then eventually we're going to go and close it. That's where you want to buy. And then put a stop underneath that gap and then look for 1 hour, 2 hour, or these highs to be tested, or maybe even further high. I don't know. This is a daily chart. It would take a long time to do such a thing, but still I think the market is trying to close this gap, but it's not going to be that easy. So we are going to get some bears there. What I'm looking for is market to go there and test it today and then come back down, right? We have to test yesterday's high because it's such a strong bull bar. But resistance starts here, goes all the way there. So I'm going to expect bears to show up. We might come down because this is a breakout bar. You can measure this breakout bar We can come down to the 33% pullback, 50%, 66, right? We could go back and forth, but we're going to settle somewhere in the range of this most likely. Even if we go up, market will probably going to come back and settle. But we'll see. What if we start to sell and this is already resistance? I like to see this tested before we sell anything, okay? But if we start to sell at the lower third, the 50%, I'm looking for buyers, and then I would look for a bullish move up. So we'll see how that goes at the open. The hourly chart, I pay attention to last week's range, high, mid, and low. I marked it on the 5-minute chart. If you have a hard time seeing here, I have resistance support levels for you that you should be always glancing at this chart during the day. We have is head and shoulders, inverse head and shoulders, but market will try to make a inverse cup, if not one, definitely two. But if we fail to take out like these higher lows, okay, market, then we'll fail to come back down here. You should be looking for some gap areas for that failure. If the failure happens, you want to see bulls take out that high, then you look for every pullback in the form of a bull flag. You want to buy those, okay? So right now we have a cup, and we need to form a handle. That handle is going to be, could be like this, maybe an M pattern. M patterns are basically two cups with an inverse handle, and then they can sell, right? It's kind of is also a head and shoulders. Sometimes it's not as visible as head and shoulders, but they are, okay? So or you could just simply double top neckline, lower high, and a swing down. You can also look for that. They do cancel out when everybody else is selling, and then they trap you here, right? So what you're looking for is market to create some kind of a lower high, higher low, right? First, go back and make a new high, come back and take out that higher low, then give you a lower high, and then you can swing back down to this prior lows. I don't know if that's going to happen, but that's the path I would follow in order to sell. So we might go sideways today, maybe up, down, and eventually market could sell because it's so strong. They will try to test this low. Bears want to break this low and sell further into these levels. But if they fail, we could bounce around here and go back and take out that high. Then I'm going to look for this to be tested and high of last week's range to be tested. So Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. Okay, we'll see. So we are above last week's mid-range, but I do expect a pullback to form that. Even if it's a shallow handle, cup and handle, I like to buy that, but we'll see how that goes. Now on the Globex, yesterday I have some buy zones marked. If we do a deep pullback, somehow we break this. This looks like already a head and shoulders pattern, but it's so bullish, guys. When something is this bullish, these patterns get invalidated, okay? And I mean, I would like to see market come down, give us a deep pullback, and then invalidate somewhere here, then I would buy. So, but that means we have to really break this Globex low first, okay? One thing that I'm missing here, those are not colors. I halfway marked this chart, but here we go. Oh, this area is super important. We could actually dip under here. So if market starts to sell somehow, instead of going higher, or goes high and traps and then comes down, we could sell into this area before finding any buyers. And then right underneath this area would be a deep, deep pullback before we trap the bears and then market turns around. But we need a catalyst for that. We don't have any catalyst today. How about tomorrow? GDP is tomorrow. So what we can do, market can go up and up and up. That's great for market makers to trap any buyers there. And then when the GDP rolls up, okay, tomorrow, they could just sell it all the way here. When everybody else is selling, looking for even further down to be tested, they can actually trap you around here, buy and go back up. So maybe today we continue, right, or we come down a little bit and then continue, go back up, come back inside the trading range, go back up, and then set the chart up for tomorrow's big move GDP, okay? So this area, pay extra attention. Yeah. This one already tested. Don't trust that one. There's a gap here. There's retest, breakout. So this area is a breakout test area. Okay. So we're sideways in pre-market. Yesterday, it was a good session yesterday. I traded this, and I was looking for the prior day's price action, really strong buy, always in long, and market actually turned even more bullish right around here. So any pullback is probably, any sell-off will be a pullback. And I even told when I sold this that day, and I said, I'm looking for a 50% test of this range, and I will take profit. And I did take profit end of day, that day, Monday, and then and walked away. And the next day, this is, you can't really sell this. We gapped up, so market is looking for support and resistance. First bar is a bear bar, right? And then if you sell this bar, you're going to be stuck. What do? Say you sold this bar and sold the close, and you put a stop there, and market goes and gets your stop. What do? You immediately reverse and double up your positions, and then you target these highs, and we have a cup here, so you can actually measured move, right? You can measure this entire range, this pullback, and project it up. And that was the measured move. We have reached the measured move, tested 3 times, created a ledge. So market could test that ledge, or even if we come down, we will eventually go back up here. Since we're so close to it, it is the nearest magnet. Oh no, we're actually above it now. So we're at 51. Now that I'm looking at the ETA chart, we're already above it. So we're right around here. So we're going to open up as retesting this ledge. So what happens with ledge is 80% probability we go and test it. And then the second part of the ledge is even if we go higher, we're going to eventually come back down to it. That's the other 80%. So this one is done. There's a small trading range. Market could go there. Probably will test right there before coming down. If we get above it, then that's where we're going to go. So if you sold for some reason, thinking that 50% chance that you have a sell-off, you're mistaken. This is a bull flag. Okay, so market is going to break out from here. You have a breakout coming up, bullish breakout. So you have also a wedge. So this is a wedge, bull flag, and the market is reversing, right? So look what it did. It went up high, and then it came back down. Everybody's selling, but then they trapped those sellers and then heavily bought. So you cannot sell this. If you were keep selling, you see bar 4, that's your sign that you're going to lose a hell of a more money if you are stubborn and you stay in this trade. Then you're going to have to scale in a good, decent bear bar. Where is that bar here? It's not there. So now you're going to have to endure this. So your losses from, I don't know, $200 minimum, it's going to end up $1,200, right? Maybe $2,000 by the time you get a decent bear bar. But that's the first scale in. You sell that into this gap and not seeing any gap closes, you're just adding to your losers to become a lot more, losses. So you see a bar like this, just exit out. Market is telling you that this is going to go up. It's going to keep the gap open for minimum 20 bars, if not more. So they tried to reverse it after 90 minutes, but that was a desperation by the bulls who got stuck maybe down here. They might have scaled in. They sold again. I mean, it's just not happening. No gaps are being closed. You're going to get a gap there. You got a decent gap there. You got another kind of gap here. They retested and the buyers show up. Now around 48 and 50, bar 48 and 50, I look for a swing, minimum 6 bars. So here is 48, right? Beautiful buy signal bar, 1, 2, 3, 4, 5, 6, 7. Or 6, you count from 49, 1, 2, 3, 4, 5, 6, and it goes sideways, right? Nothing's going above it after so many bars. You got to take the hint and say, I'm done with this long because this isn't really going up. We have been in a trading range. There's a trading range midpoint. There's a trading range high. This is a tight trading balance zone. We're probably going to come down here. In order to go get an average 12 to 16 bar swing at 1:30 p.m. Eastern time, market needs to, after a couple of maybe bear bars, immediately get above that 6th bull bar. If it's not doing that, that's a hint given to you. You just have to pay attention. And the market stayed in some kind of a trading range after that. All right, so we just tested the first target at the open. That's a gap up. But this is also spike pullback channel. We're testing. I'm a technical trader. I love to find my reasons with all the technical reasons on the chart to enter a trade. I'm not going to, obviously we all look at the bars. So I will draw these just to see where we are. That was an extension breakout of a bullish channel up. Maybe I'm not all that fantastic with my channel drawing here, but let's get those. Yeah, that's better. See, we really didn't really test that. So I don't know. Let me see if I measure that. Just trying to. Yeah, I guess we did. All right, so that's it. Look, perfect. This is what is bothering me, but we come right back to the midpoint. All right. So is this a trap? We don't know that yet. If the bulls actually they look like they are selling, but yes, it is a trap at the moment. But if the bar closes above high of yesterday, then it's not a trap. Bulls will try to buy once again. If the second time they're buying that fails, then it might be a bull trap. So you have to give bulls to fix this, okay? However, if the bar closes bearish and we get another bear bar, that'll be a trend from the open for bears. Very strong bear bar at the moment, but it's not enough information. You sell this, your stop is somewhere up here. We got a bunch of magnets there. Now this ledge is no longer importance to me. I'm going to get rid of it. We already test that. If we close above that price line I just deleted, then the market will continue to go up here. So we might be still in this trading range. Eventually, market will want to come down on top of the bar 19. But if we start closing bear bars, then we come down and test this area. We could create a expanding triangle. So how do the bears show up? Well, first they need to come down to the bar 19. Then they need to come down to the apex of the triangle, bounce, break, bounce, retest, then we can sell, okay? Sure, I'll sell with that, but I need first bears to actually print a bear close below the high of yesterday. Because if it doesn't and I sell right now, right here, could be problematic. We might need to make a double top before coming down first. So this is a breakout, the open, pulling back down. And they could trap you because it's still always in long. Look where the bar closed. Okay, this is the first attempt by bulls to stay above high of yesterday. If the second attempt fails to take out the bar 1 high, then you can look for, to sell. Or you get a second bear bar, very strong, stronger than the bar 1 close, taking out the bar 1 low with a bear body. Then you can say, okay, this is now coming down an expanding triangle. We're going to test the midpoint and then the lower trend line, or at least we're going to get closer to it. That hasn't set up yet, so you cannot sell. There's decent volatility in the market. Its ATR is 5, so market is moving pretty decent. It's not too fast, it's not too slow. Probably market wants to test the bar 1 high. So I can now put this is my open of the day. Bulls need to get above the open of the day to become a lot more bullish. If they fail, then they fail. That means we can't buy. Okay, so I bought and scalped a little bit, and I said it several times, we will probably test the bar 1 high. And I'm looking to see, I'm holding a runner. I'm looking to see market to get to the magnet, which is March low, and then the second bull target that the bulls can reach. But if it fails, I will be quick to exit out with that. Where can we go? Look at the Globex chart, or actually look at the daily chart. I did say that we really need to test this line, and we are testing. And I said that we need to go test yesterday's high thoroughly before we even think of selling. We are already doing that now. If the bulls breach this line, okay, with a bull body, they will keep pushing this higher. But remember, I said we're probably going to test these highs like 51, 22, 23. We might go up a little bit, but eventually we will come down. So there are probably sellers waiting up here or towards the EMA. But something this strong on the daily chart, 1, 2, 3, 4, 5 bear bars, actually 6, I believe, 6 bear bars. Probably bears want to keep the gap to EMA open. So we might eventually fail, and then suddenly we start to get a sell. What could happen is we right now have expanding triangle, and we may be breaking it, but I don't know. So I'm going to use the last week's midpoint, mid-range as the apex. It really is not the apex of the triangle, or apex. I don't know. How does Richard pronounce it? Every time I say apex, I'm so conscious about it. It's like he's always correcting me, so I'm guessing it's apex. So I came to a conclusion that I am saying it wrong. I'm pronouncing it wrong. Anywho, my self-doubt there, monologue. Here we go. So we have a close, which is good. But we need a consecutive bull close there. Now, we get another bull bar. That's great. March low is magnet. Furthermore, up. We are kind of gotten away from the EMA at the open. We don't have consecutive 2 bull bars, so that's a problem for bulls. 2 bars, bar 1 and 2, really overlapping greatly. So that's a problem. That creates definitely a problem. And there were sellers with the close of bar 1, so they're selling higher, trying to get to the midpoint or the open of bar 1 so they can get a break even of some sort. Bulls are trying to keep the gap open. Now, there are 2 types of gaps that I look for. Say this is body, market sells, and then you got another sell. From there to there is 1 gap, okay, that open. I can also counter in from body to body, and that's a gap. But it's better to pinpoint Sometimes what market does is it just goes up and up and up and up and up and up, and then closes a body right there. Okay, so this gap actually did not close. It looks like it's closed, but I consider wicks are bad price action. So to me, there's a gap here, and the gap is from here to there. I don't like to measure two identical bars and a one not so identical bars, like two bull bars and a one bear bar, or two bear bars and a one bull bar. I don't like to measure it that way. It's never accurate, but I'm going to show you how I do it. From there, and I'm going to take that. Market could be wanting to go there. Oh, hello. It ends up being a confluence now with 51.31. I don't know if we're going to get there. It could be just a coincidence, but I don't believe in coincidences on the S&P chart. So the only time that I would expect this to be tested is when we start to close more bull bars here. But also, that's actually half inaccurate statement, is the only time that I expect this to be taken out, this to be the accurate target, if we had three bull bars, not just two and a one bear bar. But probability increases as we close another bull bar. That's a buy to close and close higher. So it's a higher probability, even if we don't go and test here, we go near one of these magnets. So target is being the magnet. This is from the breakout of this trading range. That's the 2R, okay, is 2 times the measured move of this range projected up, or this right here. Yeah, so it just, you expect follow through basically, but probability is lowered because you don't have 3 bull bars with a gap. Another way to find conservative target, if this bar 3 closes bullish above bar 2 high, then you take the breakout point and a stop, and that would be your average target, which is a lot more conservative and doable. So I'm going to measure that one instead. But I need follow through. That means bar 3 has to close bullish. What happens if the bar 3 closes bearish? Well, we said, well, that was a great effort, bulls, but you botched it. Now, they didn't really botch anything. They have a one-tick body. They have given a good effort. The best they could do was to close that one-tick body doji above the close of bar 2. So that's still a breakout. It could still be a follow-through bar. It's good that it's not a bear bar. But bears see that as, this is not working out, so let's close a bear body. Then you'll know that market can come back down somewhere at the lower third of bar 2 in hopes of looking for buyers, because bulls bought above 2. They will probably scale in here, break even before market moves further down below. But that isn't set up. We don't have a bear bar to get scared here. But bad follow through bar 3, so that kind of muddies the waters. But if the bulls now close a bull bar, then you have a follow through, and the market will get up here. I mean, you can measure the bull bar, sure, measure the bull bar, but that's not a good breakout, is it, with bar 3? If you're basing your targets on breakout of bars or good continuation, doji is not good. That's my opinion. That's what I have seen in the market many, many times, because I did measure one point or two the way that you describe. So we're in a trading range. Excuse me. We're in a trading range on the 15-minute chart, and you can see market is confused a little bit here. Bulls want to move underneath. Bears want to move underneath the key price level, which is 51.1975 to 26.50. We need 2 consecutive bear closes here to start a swing trade down, but that's going to be problematic. Probably buyers down here waiting. It's a trading range now. Bear see a, if you don't look left so much, only here, bear see a double top is neckline bear flag, or wedge top up on this, down on this, up on this, down on this, up on this, and a lower high, and then bear flag to sell into this neckline. But this, could this be so truncated? I mean, it could be, but if the bulls actually close a bull bar, then you don't have to worry about it. We could go take out this high, or this is definitely a cup and cup, and we're going to form a bull flag, and we're going to keep going higher to the Globex high, and we're going to get a breakout from the Globex high. Hasn't yet decided, so I'm watching this with intent. We're inside the upper range of last week right now. We need some breakouts, bull bars, to get us to the 200 EMA. Could act as resistance. Yesterday, before the open, okay, so let's go back 2 days ago when I actually drew this, and I said, you guys need to worry about this because you can't just buy it right away. You should expect to sell, right? Market is coming down. It probably wants to, test these lows, but the problem here is a strong leg up. So this pullback is, if it doesn't sell, look for a second sell, okay? Second try, the bears are trying to sell. They failed. This was a bear flag from the pullback sell zone, and it failed. So 2 cups failed. What did it turn into? Double bottom bull flag. What will the bulls do now? You can actually buy into the failure, take profit there, and leave a runner. Your stop is somewhere down here, or maybe down here. We take out that high, you can move the stop down up here. Then look for another flag. Look for another flag before market reverses down. We do have a wedge top, okay? So I told yesterday before the open, and market was around here, I said, do not sell this. Look for this target and look for the EMA to be tested. Then you can see if we are closing bear bars, hourly bars underneath the EMA. Then you can look for a pullback. We never did that. There are no consecutive bear bodies. Instead, we're closing consecutive bull bodies above it. So market now starts a small pullback bull trend and goes up. Now the bar's gotten smaller, made a double top and sold, but that's a pullback. What do you think the market is doing right now? What we do have is flag, another flag, flag. So it's probably final flag. It's going to break out before coming back down. So it's looking for a resistance. Where is that resistance? Let's find out. There are several. There's one right here. All the way to here is we're already inside. We're probably going to go up a little bit. We might test this low. I don't know. But eventually this breakout could finally fail and we could go sideways and down. All right, so the bulls got to follow through. There's no bear bar here. Bar 3, 1 tick body was kind of a first signal that's the best, that the least that the bulls can do, and the bears couldn't close a bear bar. Then you look for a limit bulls to enter underneath, or somewhere towards the maybe 33%, 50% pullback of this bar. Then they go higher. But it's up on this, down on this, up on this, down on this. This is actually the third leg up with bar 5. So it's trying to reach a magnet here. So magnets are Asia high, US midnight open 51.26.50 is March low, measured move target from the gap, kind of a gap, it's like a negative gap. And then this target, we might get there, but it is the third leg up on this, down on this, up on this, down on this, up on this. All right, maybe we can see it on the 2-minute chart. Yeah, you can see it. Up, down, up, down, up. Now we have a wedge top. Market wants to probably come down on the 2-minute chart to test the 8 low or 9 low. So when you're getting into any trade, you always have to is count, am I in a micro wedge here? How strong is this? So is, you have to worry about this kind of thing. Yeah, I did talk about that 50% of that leg. So if you found that, and I said, we're probably going to go test that 50%. I don't know when you joined, but we were already talking about that daily chart early at the 9 o'clock live session start. So we did talk about that. So I said we're going to probably go there, but I need some kind of a good setup to sell. Right now, we're still testing that line. We're still trying to probably go up a little bit. There's a wedge here, but the bears need to close a good sell signal bar. So I'm not going to sell anything because market can continue to go higher to 51.2825, 51.28, 51.36 area before coming down. At least maybe we might need to test 51.28, 51.30 area, but we'll see. But we're not really getting good consecutive bull closes above this trend line. That's a problem. Now, if bar 5 closes on its low, made a high, coming down and take out this low, and then you look for a pullback, then you can sell, right? So you need a trap pattern. What is that trap pattern? Market is going up, right? Makes this kind of move like that, going up, makes this kind of move, and then we come down, then we go up. So we did that. So you want to see this area be taken out by bears, right? So you want to see first take out, then pull back, then you can swing that down. So this lower high, bulls take out, but they took that out. Then they come down and take out this, make new low, and then go back up, and then come back down. That's your signal saying that this is going to sell. We don't have that yet. All we have is a barbed wire, tight trading range with bunch of dojis. So the bears now need to take out the bar 4 low. If bears take out the bar 4 low, then the first pullback they're going to sell. Because bar 4 is lower low in price. Okay, market's going up, makes a low, then makes a high. Okay, that's great. But now what do I need for bears to take this out? And that low. Okay, you can even sell the next pullback. That creates a head and shoulders pattern. All right, so the bears did take that out. Bulls couldn't close a body. But the problem here is that this is a barbed wire, so you have to give it a little bit of space. We tested up high, so that's a failed breakout. Now market wants to probably sell. There was a failed there. That's a failed bull flag. But the moment you sell this, it will go right back up again probably. But it's getting stronger. So what could happen? Well, it's trying to come back to a magnet now. It's getting very stronger. It's trying to come down to this EMA. And it can move underneath the EMA. And like I said, could test bar 19. That's the first target. Why? Because there were sellers. Bears actually scaled in, got trapped again. So they're selling higher. They're trying to get back to here to minimize their losses. But you do now have a double top, double bottom. The close of bar 6 market, the machines are programmed to do something. They assume it's a news hour. So what happens is you got a failed breakout, failure, failed. We could get a failed breakout right here, and market could reverse. Then we get a bear bar. I might be able to sell and look for a measured move down, but we'll see. So I just have to see how this bar is going to close. This is neckline. I'm sorry, this is apex of the expanding triangle. I take that maybe. Yeah, that's better. But then this is not a good apex. Let's go back to what it was. So what happened there? Bar 3 did not close bullish, so I didn't remove this, but you should have already made your decision with the directions I gave you. Since bar 3 is not a bull bar, probability is a lot more lower for bulls to even reach there. So you simply do not expect that target to get hit. So you got a trading range with failed breakouts. If the bears close below EMA, we become a lot more bearish. We could come down and test around 5105 area, 5108, 5105. Bears want to take out these lows, which is Globex low, and they want to bring market down to here. This would be a good double top above the moving averages. And failure of a failure is swing. So it could actually start to swing down suddenly. So be careful here. Can the bulls show up here? We need to trap the bears underneath the EMA first. So bears will try to sell is another time. And if they fail, then the bulls can come in. So that's a breakout pullback, and then bulls can show up. We have a gap bar closed at and around the EMA, but not below the EMA. So that doesn't make us always in short, but with this bar 6, we might be showing signs that the market might be going into always in short, but we need confirmation. Really strong bar, but it's this opening range, opening range, 6 bar, 30 minutes opening range. So what do I need here? Well, I need 2 bear bars. If I get another bear bar with a stop above bar 6, I can sell, right? I would look for 1R, 2R, but that hasn't set up, so I can't really sell anything. It's probably going to bounce. Like I said, it will bounce, and it's kind of showing signs of a bounce here already. Why? Because bulls probably bought it, high 1. Maybe they thought this is high 1 and this is high 2. They're stuck up here, so they're trying to buy here. Problem here is this gap. So if the bulls cannot close this gap, they're going to exit out, look for a better buy signal somewhere here to scale in lower, and the bears can sell it. So I think I'm just not going to buy anything. Trying to filter the trades. But the one thing that the bulls are doing is trying to keep the market above the high of yesterday. So that's a good news for them. But they need a strong inside bar bull close. If that fails, bar 19 highs, maybe even overlapping with part of bar 19. So they just need another bear bar. Others sold underneath the 5 with double top neckline is entered is below 5. They already got their 1R. They want continuation, get to the 2R. So that means we need a bear bars closing below EMA, below 11.25. But it's a trading range, and we're at the EMA. Double bottom at the EMA. Bulls might be seeing, I don't know what they're seeing. If they were seeing something bullish, then they should have not let this happen, because this could be creating a bullish pressure right now, bearish pressure right now. So it's a bit of a problem. Sometimes it's better to wait before taking a trade. Limit bulls are buying at the EMA, scalping at the moment, but they are aware of the gap bar. They're trying to bring it up to bar 5 low, bar 4 low. But I see a bar like that, I don't like to buy against it. like bar 6. Believe it or not, the bulls are making money, bears are making money. Bears move the market about 15 points. So they are taking profit, but they want a lot more than that. So they want to move market 20 points. That could bring market down to possibly to 51.0575, 0475. So somewhere I marked here 05 area. So you do have an inside bar here, 7. That's not a good for bears, but it's got an upper wick. Bulls bought at the EMA, like I said, they're trying to bring the market up to 5 low or 4 low so they can exit. Can they become more bullish? Well, they're going to have to go back and close somewhere here and get another bull bar, then give us some kind of a wedge top. But if they're trying to get out of the market safely, then they won't be able to. So go higher. But if you're a bull and you bought there, you bought the close of 6 or somewhere in the around the EMA. Look, you actually, I'm going to use the edge to edge. You actually have a safety price hit already. So some will exit. But if the bar closes bullish, then you're going to see more bulls trying to get back to the bar 4 high. 4 high, 2 high. But if the failure to close a bull bar, then we can come down. What about bulls? Can we actually swing here and make a new high? So failure of a failure, then a bull swing. If this bar closes bullish, many bulls will buy above it with the stop underneath 7. That is an outside, inside. Outside is, I'm sorry, that's an outside, inside, and another bull close. Then they will buy with a stop here. They're going to go for 1R, 2R. So they're trying to get a bull swing. I didn't sell because we didn't have a close below the EMA. Okay, and I also didn't get as consecutive 2 bear bars. I didn't buy because I wanted to see if this is a attempt to, I didn't buy the inside bar. It was just too small and it's got an upper wick. And I wanted to see if the bulls are actually having an attempt to break even or are they going to want a swing. So now with bar 8 closing like this, there will be some sellers here, up here, maybe a little bit higher because this is now a trading range. It's just that many will buy and they're going to put a stop here. I don't need to put the stop here. And they're going to look for a follow through into here, maybe even higher. So you can see that bulls are trying to get their first entry above 2 or bar 4. Still that contract to make money, so they're pushing. So the open is a little bit tricky, especially when you get these dojis at the open, no follow through. So breakout, pullback, and they're buying the pullback. That's good, but sometimes you have to wait for the first 6 bar to print, and then you make a decision if you want to swing right here. This is a trading range environment. What do you see here? Market bet against a strong bull close bar 2. You can see it right there. And they try to sell it. This is a limit order entry. It's above a bull bar and it closes a bearish. It's a weak bearish, but they sold it anyway. But then bulls are betting against bears, so you're in a limit order environment. It is going to break out eventually from somewhere, but until then, they're going to trap you. So this is the kind of setup you either bet against and scalp and exit out, or you simply step aside and wait for that breakout. There's always a trade to be made, but it's just better to enter a safe trade that you're 100% sure that, or 99% sure, right? That's not the Alberts, right? It has to be 60% probability to make money, right? But there's a 40% it could fail even if you are, sure that this is going to go higher. I like a little bit better probability. Okay, we have another close, so that's good for bulls. Now a second close above EMA would be even, I'm sorry, not EMA, the trend line would be even better. Bears want a double top. They see a wedge top. Now they want a double top lower high, and they want to swing this M pattern with a neckline here. Okay. So they want this, come down, pull back, and swing. That's what they want. But if the bulls close a bull bar, we might go and test the magnets above. It's a trading range. So bear machine C bar 8 is a gift. Okay, so it's just bet against and sell. They're trying to scalp for a couple of points and close a bear bar. If they close the bear bar below the midpoint of this bull bar 8, then you're gonna get another bear bar. And that just happened. Can you guys hang on, everybody? Sorry about that. I thought I heard something. Okay. Anyway, where was I? Yeah. So if this bar closes bearish, they're scalping right now. Next bar could be bear bar, so you get a double top neckline and market can come down. What about if it doesn't close bearish in 2 minutes and 12 seconds? If the bar closes on its high, then no bears, self-respecting bears will stay in the market, and then the next bar could be bullish again. Bears trying to get a double top swing start into the 05 area, maybe further down this area. They're coming down. So this looks like a double top neckline to me right now. They're trying to come down and take the neckline. Many bears already entered their stop orders. With stop orders, limit orders entered, stop orders entered underneath a very strong bull bar 6 as they're trailed the sell stop. So now they want to make money. So they want bar 6 low to be tested. So as soon as I saw the midpoint of this bar was taken out, I actually sold with bar 9, and then it just accelerated. I took a little bit of profit because I am not 100% sure, but looks like this is now a swing into 5105. So seems like market is trying to make its way down, but there will be some buyers here because that's a breakout point. Okay. And remember, there's also a ledge, small ledge there. 1, 2, 3, 4 identical tops went up. Although, went up. Well, that doesn't matter. Maybe it's trying to get there in this tight trading range because that ledge was done complete. So what is it doing? Remember, this ledge top, we went up, and I said we would probably come back to it, so we're there. So the market's trying to decide here. So I scalped here. I'm holding a runner, but only one contract. I just want to see a follow through. So I want bar 10 to close bearish. The only problem, this is still a trading range. So if the bar 10 closes bearish, then we could easily come down to the 5105. That's yesterday's close. The gap is, bears are trying to close the gap. But if we move underneath close of yesterday, then market will try to get to bar 19 area. But you see, it's trading range, so it's still holding. Market is still trying to bet against strong bear closes, but it hasn't really turned into always in short. So the limit buyers are showing up there. Many got stuck above bar 8. Many bulls, they might be buying here. They see a expanding triangle bull flag. They want to get back to the midpoint, but this bar closes bearish. We will break this trend line. Bears looking for a second bear bar here, sell a little bit, then bounce and create a bear flag, and then sell further down into this zone, which I'm more interested, and then we'll probably bounce there. Just looking to see how they're going to close that bar to determine I should stay or not stay in my short. How do you do that? You just hit sell market. You got buttons on the application you're using. This is trading range. So you either sell at the high, and they're obviously selling, and you buy at the low. So if you sold it, you take profit like the way I did. But I'm also holding a runner because I see a double top and a swing opportunity into this area. So I want a confirmation. So I want a second bear bar here. And if the bears do that, then I'm all good. It'll be great. But if they don't, then I'll exit. Because this is support here, breakout test. Bulls bought the breakout test, bar 6 close, but they could not make a new high. So then bears took over. It's got to break out to one side eventually. So if it's the bear side, I want to hold a runner. But I also have to pay attention to the trading range. One thing that the bears are failing to do is that taking out that neckline with a bear body, and they're probably going to sell higher. And they're looking for some kind of a bear flag, whether it's a 3-bar bear flag or 6-bar bear flag, but they will sell. Even if we go higher, they will sell. So the goal is to get follow through here and take out the bar 6 low. But it's the trading range lows. Just need to be patient. We have 2 bear bars. Some are already selling, and with a stop above, they want 1R target, maybe 2R target. I don't know if they're going to be able to get it. There's no urgency to sell anything. It's not yet. We do have 2 closes, 2 bear bar closes below the EMA. That makes us slightly always in short now, but market is very bullish. So the bulls are now trying to trap the bears under the EMA, which I warned you about, that we could trap them, okay? But their bears already sold. They will sell maybe even above bar 10, and they will try to get a break even if they cannot get follow through selling. And this is all happening because we did not take out the neckline with a bear body. Okay, so some bears will sell up there and could be a micro double top. I don't know if it's going to be a bear flag. Are there any strong sellers there? It's still a trading range, so it's trying to get to the midpoint of the trading range. Can the bulls show up here and would become very, very bullish? Yeah, it's possible. But I would expect bears to try to sell first. There's a wedge here, 1, 2, 3. Bulls see a bull flag. So they want to get to the midpoint of this trading range and close above bull bar and continue to go up and start swinging higher. I haven't really exited yet. I want to see first these bears sell so I can break even. If they don't, then I will exit and look for a different trade. We're testing the trading range midpoint, and bears didn't really show up. We're right at the midpoint, so the bulls are trying to close another bull bar and go up again. I don't know if they're going to be able to do so, but if we do, we could reach a little bit higher perhaps, but if they fail, then we're going to keep coming down. I exited because I didn't like the way the bar 11 closed. The sellers were not strong above bar 10 due to the trading range low buyers. In order for market to become a lot more bullish, bulls need to go back up to 51.19, 51.20 area to close bull bars and keep buying. But if they fail, then the bears will show up again. Okay, so they are selling at the 50%. It's a very difficult open. And when this happens, you just have to step aside and wait for some kind of a breakout. all you can do is just limit order, buy, sell, scalp. Every other bar is reversing, so it's not something that's in my hands. Well, I did say this is an expanding triangle probably, and a bigger expanding triangle, and I said this is probably a bull flag. So you probably didn't hear me say that, but I did say it. So, but every bull attempt is failing and every bear attempt is failing. Now look at the entirety of this 12 bars. Who has the upper hand? Bears. Why? Because they are printing more consecutive bars than the bulls. Is the only time that the bulls printed a consecutive bar was right here. So they now need to close a bull bar, another bull bar, get above somewhere upper third of bar 9, and then break out. So what do the bulls need is another bull bar. What do the bears need? Just take out the 11 low or 11 open. So bears looking for a bear flag, micro wedge top, 1, 2, 3, 10, 11, 12. And here is a spike, right? So that if this bar closes, 12 closes bearish, then they're going to get their bear flag. If you're going to draw that line, you have to anchor it somewhere, okay? Then this would be how you draw it. You have to anchor it. Remember what L says? He even anchors it. So if your line is hanging out somewhere here, that's not good. You have to anchor it somewhere. That would be the line. All right, so we did close a bear bar here, but we did not take out the 11 open. But also bulls don't have a 2 consecutive bull bars either. So it's just a sideways as it goes. It's squeezing, so you got triangle after triangle. You got a smaller triangle and a bigger triangle. So the before market finds its way up or down. It's basically doing 5 or more reversals. It's a trading range open. And the 25% of opens is this way. You can count, right? Here's a reversal, here's a reversal, here's a reversal, here's a reversal. And here's a final one. So 1, 2, 3, 4, 5. So we are going to get some kind of a decision soon. Since you have, and get rid of this, right? So you have a trend line here. Bulls want to break out, stay around the EMA. Look, bears try to sell, failed. Bears try to sell, failed. Bulls bought. Okay, now let's see if the second buy actually works around the EMA. So what you need to see for bulls is to stay above the EMA and then start to break out and make new highs. So you don't want to see bear bars closing below the EMA. Okay, so that's a wedge, micro wedge, bear flag. So now bears are getting their second entry short. They're trying to close below this trend line and sell further in here, but they have to close the bear bar. So far, this is a bear flag from the EMA, but you don't want it to fail. I need this bar to close below the EMA. Okay, so it did close below the EMA. So that's good. So that's basically a bear flag, but not below this trend line. So you want bears to get follow through here. Some already sold the 13 low, probably some sellers under 13 low, but it's the wick is the problem. Oh, they did sell. Okay, so limit at the EMA, above the EMA, stop below, maybe even under here, so they are making money. The goal is to get to the 05. All right, so the bears did well, but they have to close a bear bar to get follow through selling into 51.05. Can we reverse from here? Could this be a bull flag? 1, 2, 3 up on this? That's the last high. Down, up, and a wedge bull flag. If we close above EMA, that's going to be the problem. And that you're going to have to make a decision. If you're still selling, you're going to end up exiting. But you don't know that. So there's still 3 minutes and 30 seconds for bears to close a bar 14 below 13, and they get follow through into this target, which is bar 19 high. Because they scaled in here, so they want to get around here. I will only worry about bears is when we start to close above the EMA. Otherwise, they're trying to close a bear bar here. Bulls need to close below close of yesterday to get bears need to close below close of yesterday to get follow through. So where this bar closes is important. Market keeps reversing. Anytime you have a triangle breakout or wedge, I mean, it could get a rejection, but we close a good bear bar, will quickly come down to 05 area. If they fail, then we're just going to reverse back up again. So last minute for bears to take control or exit out. Because market could reverse and go right back up to 51.28 area, 30 area above. I'm looking for follow through from bears here. At least a test of 51.0525 where I marked. So I did sell into this. Just want to scalp. Okay, so I took profit here. Looking for follow through into this area and possible buyers in here if we can continue. Excellent. All right, so last week's mid-range, we come right back to it. We could sell even more. I want this area to be tested and see if there are any buyers here. Now, this line right here is the apex of the triangle I talked about. You don't need it. Just get rid of it because you do have a larger market is trying to sell. Market could sell into 51.0150 area. And then further, it could break below it, come down a little bit more, bounce, retest the Globex low where it broke out to the downside, and then continue to sell into here. So I'm looking for, this is a swing, okay? Like I said, double top neckline. The only problem you had here is that I warned you we're going to bounce, and we bounced. There was a trend line, so we're now selling. So you can find your measured move target to the downside as well. 51.0150 from the Globex low. We're almost there. I mean, it would be really nice if we can, but we need to first close below 51.05. All right, so bears was sold higher. They came back to their first scale in sell. All right. Would that make them any safer, or are they making any money? Probably not. So they have to actually test these lows, break, and come down a little bit more in order to make money, because they were probably stuck somewhere down here or with this bar yesterday. You have a double bottom here, so there are stops here, all kinds of liquidity down here. Why? What does that mean? Well, there are stops, right? Bulls who bought, there are stops there, right? So bears are looking to sell there, so they put sell stops there. So market makers need to run and then go back up. Everybody's stops are tested, they get kicked out, some enter, then it goes back up. Every bear sold here gets nervous, exit out, and then they sell again. So we are going to bounce, even though we test underneath here. We might come down a little bit, but we are going to bounce. So I looked for, remember I said I'm looking for a bear flag. So I said there's a micro bear flag with a wedge top, 10, 11, and 12, and the bears close the bear bar. I hoped a little bit better for that bear bar to come down, but it's a phenomenal signal bar, so you can stick a sell order underneath, or if you put a sell order there, trail it up, and the bar 13 fills you. So I entered with bar 13, and I took profits right at the 51.05.25. So one tick above 51.05. But it's still coming down. This area I marked was my swing profit target area. I want to see how market is going to behave below this double bottom. Very nice. Could come down more. Look at the moving averages. But that is a spike pullback channel, right? So we're testing the channel lows. Buyers might show up here. Be careful here. Or we're going to come down and then go up. That's a bounce I talked about. So if you were bear, look, we just moved underneath this double bottom, 67, 78. Now the bar hasn't really closed. We don't know if the bounce is going to be strong, but it could. Or there's more room to downside that they see. I think it's going to bounce a little bit here. And you can see that it's bouncing. But you're buying against 1, 2, 3, 4 bear bar micro channel. So probably sellers above. That is the bounce right there, but bulls need to close a good decent bull bar. If they fail, bears can continue to come down, but it's a support here. Bears could get follow through towards down here. So difficult to buy bar 16. That was profit taking by bears. Let's see if there are any buyers on its midpoint of bar 16. We might need to wait for bar 18 for a reversal, and we may not get it. It doesn't have to be bar 18. It could be a couple of bars later. So until then, if we take out the 16 low, market will continue to come down. But look, they already bought some limit buyers at the 50%. All they have to do, close this bar on its high. If they fail, we continue down. So many bears are holding for a target down here. Closing below an hourly bar with bar 24, below the midpoint of last week's range, which is where we are, could accelerate to come down this area before finding any buyers. So the bears now trying to take out the 16 low still. Some buyers did show up there, but it could be just a couple of machines. If the buy orders weren't strong, then we take out the 16 low. but I'm still holding, but I'm not very happy with how slow it is. So if bar closes on its high, I might exit out. But I'm still holding. I'm looking for follow through by bears, because we're right at the apex of this expanding triangle. If the bears break it, then we're going to keep coming down. Remember, they actually bought right there. I'm sorry, sold. See, 2 bear bars, 5 reversals, 2 bear bars. There are no 2 bull bars. Put a stop there. That's the first target. Anybody sold and entered either underneath 10 or trailed up and entered underneath 12, they want 1R, and that's the target. Bears need to close the bar as low as possible to get follow through. Some bulls are looking for a backdoor to enter, is a counter trade. So there might be actually above bar 16 waiting, but this bar closed really bearish, and some bears are already selling. We need to test its low, probably 17 low, before trapping the bears, but I don't know if they're going to be able to trap right here. If we cannot test 1 tick below 17, we could easily trap the bears right here and then go right back up. But bar really closed nicely, so I want to see market to test 1 tick below 17 before reversing. And if they don't reverse, then we're going to keep coming down. So the target is that blue line still. We are testing bar 17 low. Like to see bears do better here and prevent a double bottom with 16. I think we have not moved. Okay, excellent. Yeah, let's go. Perfect. So holding it pays off. That's good, but I'd like to see bears do better here and just give us one of these targets. We are in we are in the higher time frame target, or 150. Okay. So there's 3 minutes and 40 seconds. If bears close a bear bar, we'll continue to come down, but we are in the buy zone. So what about the micro wedge? 15, 16, and 18. And this is the 18 bar. We could get a reversal, 18 bar reversal, so be careful here. But the target is still this. Some will say, no, I sold underneath 13 with a stop order, and this was my 1R, and I'm taking profit. And if you ever see a strong reversal, that is one of the reasons why what machines might have calculated. Okay, so I look for 2 consecutive bear bars and for a swing, so I can put my stop there instead of up here. You can see why it is struggling right there. And there is a micro wedge. But if the bears close bar 18 on its low, instead of a reversal, we could get a follow through. But if it ever reverses, now you know the reason why. Because it reached a target. Selling the lower high. And another target is also right here. So it would be better for bears to actually close a bear bar below 150. I'd like to see market come down here, and I'd like to actually try to go long from here. So market is still coming down. We have tested this double bottom. We might need to come down a little bit more. We have a magnet, January 4 high. Seems to be a place that our market likes to go. 5,100, I've been always saying it's always a magnet. We came so very close to it once again. What about 5,000? I don't know about 5,000. Well, everybody wants a trend, right? I mean, what happens after a trend day? Look, if you have a major trend, deep pullback, market actually got to follow through. But how far do you think that they can continue? Eventually, it has to trap and it has to go into a first some kind of sideways price action, right? Trading range, and then tries to make another move up, but it traps. It traps the bulls, right? Because this was a bullish trend. So you can't expect trend day after trend day after trend day and then wonder, why is this price action so bad on the 5-minute chart? It's not bad. It's just following the market cycle. You may not know about it. So best to actually study the market cycle. If you are a course member, then that's great. But if you're not a course member, I would recommend you to go to online course, sign up. It's $3.99 or $4.99 for Forex, the actual course of Forex and the regular price action. So you want to learn Forex, then simply go click on this button and get this bundle, which is only $100 more. But there you will learn about the market cycle. We're simply following that. Market cycle. It's the third module, and it's a very important subject, and you have to learn this, okay, to understand how price behaves, moves. So breakouts, right? Breakouts and is exhaustions, right? So traps, and then it goes into this channel, tight channels, micro channels, before going into a trading range, so and so. All right, so bar 18 could be a reversal, but some are already buying, but it is a doji. Now, you do have an outside bar 16, inside bar 17. 17, it's a bear close. We have to test underneath. We have tested. Where's the bull bar? Do you think bar 18 is a good signal bar to buy? You need a bull bar. So I would not buy a bullet. Like to see some kind of a micro double bottom. It's a wedge, micro wedge, 15, 16, and 18 lows. But I need bulls to show me that they are starting to buy. But if we take out the 18 low, then there is no reversal. You may not get the reversal until the end of this hour, which is bar 24. You may need to wait for bar 24. But let's just wait for bar 19. If they take out the 18 low, then they will continue to come down. Why? Because anyone who sold earlier with the two bear bars, they put a stop there, and they sold underneath 10. They still want their target, which was my original target, so we could be pushing in there. Okay. On the daily charts, okay, so here's if the prior day is a bull day, okay, it's obvious a buy signal, right? You buy. But you don't sell right away. If you want to sell, you have to see these highs to be tested. Then you can sell, okay? So that's, I said this morning, we are going to go test that high. We're going to test that line before we sell anything. Then I said, I'm looking for a trap to form, then I can sell. So you have some kind of a head and shoulders pattern there. Other than double top, left shoulder had right shoulder, right? Neckline broken, retest, and they're selling. Now we got that target. Look, perfect. But can bears continue? Yeah, we got a measured move target there, 94.75. I like to see it, and January 4 high is magnet. Magnets are one thing, targets are another. So they can all be a target, but if you are measuring a measured move, take profit there. Don't expect other targets to hit right away. It could bounce violently, and you could be stuck. So it's still coming down. I'd like to see market get closer to 95. Even if it's a one-tick failure, I like to see 95 tested. See if they can make it. There's a breakout test on the hourly and a gap, right? So what if market continues to pull down? Yeah, it might. It might come down. So you do have a channel, right? Spike and channel. We've broken this channel. We're coming down to the pullback. I like to see some kind of a trap and go. And that trap could take place right here. So market is still coming down nicely. See if we can get that 95. How can we reverse? Is there a wedge there? Well, is down on this, up on this, down on this, up on this, possibly down one leg, right? So impulse correction, or let's see, this one leg pullback, two leg pullback, and three. I don't know. Looks complicated there, but we're going to go back and test this trend line eventually. Just coming down nicely. It's an inside bar it's an outside bar 16, inside bar 17 is breakout. So then it's a really terrible breakout with 18. So it goes right back into that trading range and sells. So now you have an outside bar, right? It's a good follow through. So more bears are selling its close, and it's because we have a target that it's trying to come down to. So I wouldn't buy anything yet. There's nothing here. They're still pushing this price down. If you're looking to buy, this area would be your best bet. But we could continue to sell. Bounce, fails. If we come in and we fail, right? EMA, then we keep selling. This is the area I'm interested in for reversal, and we could keep selling. So it's a swing. You're in a swing trade here. And bulls are about to test the 20 point, which is 94. Wow, okay, so this is done. And they can continue to come down. So 1.5, we're about to reach 1.5. That is 1.5. We close a bear bar below that blue line. We continue into 2R right there. We are at a 20-point bears right now. They will take profit, but a little bit more to the downside here. If you want to take profit here, be my guest. We might need to bounce, but there's no bull bar, so you can't really take profit, can you? Unless you're trading a 1,000 tick charts, then there's already a profit bull bar printed. And that shows up as a lower wick on the 5-minute chart. All right, so we did test 95. Like I said, I would. Anything more than that is a bonus, but this is where you take profit because it could bounce. But if there's no bull bar, then we will continue to come down to 50, 91, 90 area down below. So this is the profit taking here, but nothing serious. All right, so we do have a doji, upper wick, lower wick, so that's a trading range bar, bar 20, not a trend bar. Because of the wicks up and down, it just kind of signaling you that bulls are now taking profit. I'm sorry, bears are now taking profit. We also reached, if you actually measure, remember I said I wouldn't do anything in this trading range at the open. If you measure your 6-bar trading range, we also reached the measured move target right there. If bears continue to close below that, we will come down further. I think we might need to test the 50-90 area before we find a good, decent reversal. If you sold below 12, well, let's see. From here to here, market made more than 10 points. So you're basically counting how about here? From here to here, market did not make even a 9 points. So that's just a pullback. So you should be counting from here. That's about 20. 20 was right there. You could also count from here. I think many did count from here because of the 8, but that's not good enough. But say you counted from there and you entered from here, and then you are now counting from underneath 12, and then you get a 20 point. You haven't even gotten a 20 point, so you have to wait for market to get there. What if it doesn't get there? Is you would look for a good bull bar close, right? A strong bull close. Then you can exit above it, like a scalp size above it, maybe 1 point, 2 point. If there's nobody selling there, like here, right? Unfortunately, the sellers did show up there. So anybody sold here, you should be looking for a 20 point right there. So there's nothing here for you to exit out. Like I said, I think market is trying to make its way down to here. No strong bull bar yet. We need at least a good inside bar, strong bull inside bar to consider buying above it. We don't have that yet. We do have an inside bar 21, but it still has 1 minute. And the bears can step it up and get to the 20 point. I think it's too early to buy yet. But we're in the area that we will reverse eventually. Magnet is January 4. We're far from yesterday's low, yesterday's open. Okay, so you got an outside bar and an inside bar. I look for reversals inside good bull bars or 2 dojis at the bottom, side by side, and then I look for a reversal. Nothing here yet. We might get a micro double bottom with bar 20 low. Then the neckline 21 buy orders will be stacked above it. Okay, that might be the case. But if we take out this bar 20 low, then no one's gonna buy. Okay, so we do have a double bottom here, might be forming, but I'm not so sure yet. There's still room to downside. I like to see bears push this at least to here and then reverse. So I don't want to buy anything here yet. It's coming down nicely. There's a 20 point there. In fact, it might make 21. 20 point and 1 tick. Just trying to get that, which is right there, which is very close to that midline. So there's nothing to buy. In order to trap the sellers, we really need a bull bar, and I don't see it yet. I want to clean this up a little bit. I think you got the idea where the targets are, and I want to keep putting a bunch of measurements there. This I will keep. We're going to eventually get back up to this trend line. Okay, magnet tested, January 4th high. There's 3 legs down, maybe complex leg 1, pull back, and 3rd leg down, but no one's trapped here yet, so the bears are still selling. If bulls trap the bears right here, they're going to want to go up and test the upper third of bar 20. Its upper third of bar 20 is starting around 97.50. It goes up to 98.25, 98.50. Now, we don't have a breakout body with bar 22. Notice we did not take out the 20 low. So all bulls need right now is a bull close that they can then say, we trapped the bears, we're going to go up and test the upper third of the outside bar is 20. That's where the sellers probably might be waiting. Or they're going to fail, they're going to pull it up to 96.50, which is the midpoint of bar 20. And then as early as sellers could be waiting there if they're not here, because this is still pushing down, and all bears need a bar closing below bar 20 low. Otherwise, this is going to go up to 96.50, and if they can push above it, they're going to go test 98.25 area, 98, 98.25. But there's no bull bar, so the bears are still selling. But you see a bull bar, then you know this could pull back. Otherwise, it's coming down. See nothing. There's no bull bar. It's just trying to come into this area. All right, so we reached the first pullback buy zone. And let's see. See, this was, I said, a zone where sellers might be. I expected maybe a little bit more to go in, but it failed. So you see bears might be coming in to this area again, or maybe here. But how does this reverse? It could suddenly reverse without getting any bear bar closing below 20 low. That would be a sign that the bears can't continue anymore, and it could quickly reverse back up into where I said. First 96.50, 96.75, then 98, 98.25 area. That's where the sellers might be. What about bulls? How would they reverse it? Well, they need a first good buy signal bar, but then they're aware that the seller's probably up here waiting, but if they can breach that area, then they're going to go and test the 20 high. That's when you know the bulls can actually go back and test the 18 low. Okay, but first it starts with a bull bar, and we don't even have that yet. This one's still forming, but last minute and a half, bears can still push this down. Still not yet established. I'm still waiting for the connection. As soon as I establish it, I'll turn it back on. But you can see that we're going back up to the bar 20, probably upper third. Well, let's see first at the mid-range, there are sellers waiting. There could be sellers right here. If you look at the bar 24, it's an inside bull bar. Now, bulls want a good bull close, okay, and it's better if it's an inside bar. Then they can buy. So their first goal is to bring market up to 96.50, okay, which is the mid-range of is bar 20, okay, right there. So that's, but I think market is trying to get up to this here, ish. Or 90, 97.50. Some sellers are waiting there. I'm going to mark in the middle 97.75. Let's see if we can first test the 96.50 and get above it. Can market finally reverse here? Is this an identical bottom? Yeah, we have a micro double bottom, 2324. This is good for the bulls as long as they can close the bar strongly bullish, but not too big. Okay, there will be sellers around 96.50 possibly, but if we breach through it, we will quickly get to 97.75, 97.50. Okay, we just reached the 96.50. I want bulls to actually push us through. Some sellers might be around here, 97.50, 98. But if we breach this zone, close a bull bar, and then have another bull bar, we will then try to get a breakout from, oh, sorry. I did not notice it. Thank you. So I was trying to say this is the target, 97.75. So I bought into this. I'm going to scalp there. And I'm going to look to see if bulls can then close a bull bar above 98-ish. This is great. Then I'm going to look to hold. Oh my gosh. My broker is really playing with my nerves today. Okay, hold on. All right, so I did scalp it right there. It just didn't show me that it scalped, and it just lingered, order lingered on the chart. Just made me nervous there. But I scalped this successfully, which is great. I am now looking for, if the bulls close a bull bar above 98.25, then expect a follow-through test of 20 high. We could get a breakout from the 20 high, but you don't want bar to get too big. Okay, when bar gets too big, then you're in a trading range. They can sell right back down. Okay, and that pullback could scare you. But if the bulls cannot close above 98.25 or open a new bull bar and continue to go higher, if they cannot do that, we will come back down. We're in a trading range now, small trading range. It's trying to reverse. This is the 24, bar 24. But remember what I said, if you're looking to buy, this is a good place to buy. So I did buy, and I scalped it. I'm looking for follow through. But if we don't get that follow through, I'm afraid market could pull all the way down here. We get a magnet down there. And these bears are kind of bummed that they couldn't get their 1.5 and 2R, but they can continue to sell. So this isn't the end of the world for them. Well, I've been eyeing this area. It's not that I'm quick or enter and exit. Some people have a hard time believing. It's not very difficult to buy and sell. There is there's a bunch of buttons. Let's see. Right, so the bunch of buttons, you can click on them, but you didn't have to. I have buy orders right here. I laced this area. I said the reason why I marked it here because I'm expecting buyers to show up here. We are going to probably come back and retest it again, but it's just that, it's a great place to buy with a limit order. So I had an order there, and then my connection died, and that made me nervous because I'm flying blind and I have no idea what the market is doing other than looking at my trading view and thinkorswim charts on another machine and a cell phone. So that's why I stayed. I got filled and I stayed in that long, and I was scrambling to get the data connection on where I trade. So if you listen, since the open, I pointed these out. I said we could sell here with a double top, and we had a double top or head and shoulders, and we sold. So you hold it, and I said don't buy anything until we get here, and that is the first buy. So you're going against a bear channel. There might be some sellers. Remember, if the buyers show up, I said we're going to test this trend line, and that's where we're going. So the target is probably, you need to scalp around 5,150 earliest, or you can hold it into 5,101. So it's just a 2-tick difference. So somewhere between the 01 and the 150, 100 and half, you should take profit because it can still come down. There we go. We're right around the first target. Some will scalp here, or you can hold a little bit more, but this is where they could scalp. Now, what about bears? Can we come back down? I like to see, look, we've taken out, right? They sold, we're taking out that high. I like to see pullback, and then I like to see a small head and shoulders and a failure, and I can buy. So it's still trying to get to the EMA because bar 24 is a good close. Anyone who bought above 24 high, they're looking for EMA tests. So the next, they're going to try to push this as high as possible, possibly here, possibly to EMA. It's okay to expect price to get to the EMA. But this is where I would scalp. If you're holding, you've scalped here, you're stopped somewhere down here. It's going to pull back possibly, so you have to be prepared for that. But if the pullback is shallow, we could continue to go up. All right, so we just reached that target, and EMA is next possibly if they can manage it. But how many bars? So that's 14, 24, that's only 10, 12, 11, 12 bars so far. So this could come down. Because it's a tight bear channel, and the bears are probably stuck, so they're going to sell the pullback. The only problem is that every other bar is doji. So how strong it is, there's no bull bar in between. So that's good news. So we're probably going to pull back, but bulls want a second leg up. But I prefer a deeper pullback and then buy again. So there you go. You have to take that profit. It pushed a little bit further up, but you only have 12 bars to the EMA, not like 20 bars. You know what I mean? That we're going to go and test that EMA quickly and then sell. So we may keep the gap open. But one thing that has happened, and I was right about it, is the test of this trend line. So I guess the question is, who took profit at the trend line? Yes. It did. That's the bar 10. Okay, so although we gapped up at the open, but think about it as a small head and shoulders there, or double top neckline, break. Here's a flag. We just started a little bit earlier, but market did come down, and then now it's reversing. So we could go above the EMA. So the test of bar 16 probably, maybe 10 bars, 2 legs. We could go up. I prefer a little bit more down by bears before buying, and then look for a second leg up. But we could also do this. And then I would look for a bull flag, another one, triangle, breaks out. So leg 1, pull back, leg 2, pull back, leg 3 before coming back down again. And that could be, we could go all the way up here before reversing back down. How good is bar 26 as a sell signal? It's not all that great. In fact, we could form a small triangle and break out again. So bears need to take out the 24 low in order to sell a little bit further down to the gap open right here. So probably buyers there, or is right here, buyers could be here. So I'd like to see market at least come down to here before we buy again. Here we go. So bears are trying to get a good average price before market reverses back up. You can also say, well, this is the channel we're in. So I'm going to find my channel high and channel low, and I'm going to mark my mid-channel line approximately somewhere here, and I'm going to expect a test of that. So that's where it could be going to. There you go. But the bears probably, if they do take out that, we could come down and test right here. So I did not, look what's happening here. We have not tested that. We have still a gap open, okay, at the EMA. So that makes it still bearish market, right? Because what did I say is if you have a gap here, if you have a bear flag here, you're going to look for at least 2-3 more flags down before we actually make a rotational reversal. So this right here is, I said it's probably going to come down. So if it look for a resistance, which was right here, strong breakout for bears, goes back and retests it. So we're coming back down. If the bears break this, expect a follow-through selling all the way down to here and possibly to the magnet right there. So hopefully you guys actually took profit where I said you needed to take profit, which was between 5,100 and 2/4 to 5,101. So 5,101, everyone started to take profit. Notice the way the bar 26 opened. So yeah, in order to sell this, I asked if this is a good sell signal bar. Well, it's at the top of a trade channel. It's not all that great. All we needed, another bear bar. What's fueling this? Who knows? It just took out that low, so it's coming down. So anybody actually got stuck at the close, they're making money now. So this ends up becoming an expanding triangle bear flag. We are going to reverse here probably because the bulls are now stuck. So if the bulls are stuck, right, it might come down a little bit more, but eventually they will buy. If the bulls are stuck up here, right, which they are, look at the bar, look at the 26, went above 25. So now you're looking for some kind of a area where they can buy. Where could that be? Here is, if you don't want to do manual, here, let me put this aside, drawing of your channel, then use, right, I can connect these lows, connect that top, right? So where is the target? Lower 25% inside, but this is the target. We could actually reach right there if they keep selling. Anybody who were still long, both too close to the EMA, when I said you needed to take profit there, now buying, they're scaling in because they see a trading range, so they're buying a strong bear close, okay, is expecting a reversal back up. But buying that bar is kind of dangerous, and this is not an inside bar. If you buy here, you're going to have to buy down below. I would never buy there. Not if bar closes like that. It's probably going to come down a little bit more, somewhere in here approximately, okay? Then you can expect price to pull back up there. So there's a little bit more room to the magnet right there. You should wait, okay? This is still selling. They want to extend the selling from the top of the channel all the way to the outside of the lower trend line, the channel low. So until that happens, you do not buy, you wait, because it can extend all the way down here. I look at what the market is doing there. Look, it did do something very strong there. And I go back, look how strong the market has been respecting that area, right? So it actually had a swing short, came back and turned it into support, but that support is not holding. It might, but that tells me I really need to respect that line and hold it for a while. Now, here's what's happening. We could go into a trading range that is channeling down for a while because the 5-minute EMA and 1-hour EMA is getting closer to one another, but it could suddenly can go parallel to one another. And that happens, I'm going to look to sell the strong bull bars. I'm going to look to buy the strong bear bars until we get some kind of a reversal or continuation. But the one thing that the bulls are showing here is that they started to print strong bull bars consecutive. But is it enough to buy and expect market to reverse back up again? Okay, so the bulls did buy the close of 27. They're desperately hoping to bring the market back up to here. But I don't like to buy against bar 27. I need a good bull bar, at least as a signal. Then I'll buy, I'll hold it into that, and I'll expect bulls to close, maybe go higher, back to the 26 low. But I don't have that bar yet, and I don't blindly buy since I'm not stuck, because it could easily come down. These bears are still pushing market down. The bounce from here was a little bit more than 10 points. So it's good for the bulls, but it's not all that great, okay? So we could come down more. In fact, I might need to actually look for a market to reverse from here with several attempts. So the magnet and 2R of the opening range is right there. Magnet is right there. But the one thing that I'm more interested in, anyone who sold this right here, that's their 2R, remember? Oh, look, we actually reached it. Look. Bar 28 is right on the dot. Literally. Look. Here, let me get rid of this. See, that was a perfect 2R. Would have been better if it actually went one tick below, then everybody else would get filled. But it might continue. Doesn't need to stop there. Anybody who sold these 2-bar combo underneath 13 with stop order, then they're going for 2R, 3R, which is closer to the magnets. 2 magnets, in fact. But this was my measurement, and technically we have reached a 2R. So bears are making money still, and I'm looking for a good support area, and that is right here, breakout test. So we might even move underneath the moving average. Now we have a breakout bar 27, pullback 28. Bears won't follow through, but they haven't really shown anything. So hopefully they can close the 29 on its low. That would be the follow through. Just trying to see what else is there that could stop us early and we reverse back up. Nothing there. There's a bit of a gap here. I'm going to take the bodies, right, so all the way to here. So this area seems like a good place for a market to come in, test, and then bounce. And that happens to be around this area is test and then bounce. And that happens to be around this area is. There's a little bit of gap here that I have not seen, but now I'm seeing. And that explains why we're stalling here. could even go a little bit, maybe just come down a little bit more. So what do we need? So we've sold above the EMA, moved down with several legs. We have an attempt to go up. This was 2 legs, 10 bars, then comes down and tests the low, but it cannot make a new low. It's a perfect double bottom. But because this is strong enough, market can't go up and ends up making a bear flag. Okay. I think this confusion right here is putting us into some kind of a trading range. Right there is up, down. Market is confused. Everybody's stuck up here. They want to break even somewhere here. Bears can't seem to sell. It's after a breakout, it's a pullback. So if you measure this bar, find the 50%, 66%, 33%. See if the pullbacks actually sells, because there are bears waiting up there at those pullbacks. We are always in short, clearly. And we're forming a one big trading range with yesterday's range. So market might be looking to come down and test these areas before reversing back up. That is a bear flag. Wants to take out the 28 low. So the bears continue to bring price probably somewhere here. Bulls see a wedge, 1, 2, and 3, and they want to reverse it back up. They want to trap the bears. Anybody sold 27 sold again. Already making money under 27 low, but bulls want to just reverse this back up because you do have, let's see. To me, this is a wedge reversal failure, so we might need to come down more. I don't want to really buy. I think this is still making its way down. There was a pause here. It's a bull flag in a way, spike and channel up. So this area is a small trading range. So it represents support, but really the support is here. Okay. A lot of buy orders here. You can see something violent happen. Quickly they started to build a long position. So market may need to come down a little bit before we buy. I don't want to buy here. Yes, it's making a double bottom with 28. There's confusion here. We're forming some kind of a trading range. Bulls want an average price to exit out and test somewhere up here, but I need to see a bull bar. A double bottom, neckline 29 high. Some bulls are already positioned above 29 high, and they're looking for a weak bear bar, and they're going to drop the or bull bar. They're going to either get filled one tick above 29 long, or they're going to drop the buy order above 30. But buying against 27, you have to have a good reason. Okay. So you're either looking to scalp the pullback because you know some bulls are stuck up here and you know they're going to bring market, they will try to bring market up here. And that could be a good way to enter and scalp a few points, could be a 5-point. But you're in a downtrend, it's selling, I don't want to buy against 27. It's a much better area to buy down here. At least have the bulls show you a second entry long, right? So new low, high close, possible high 1 from the lows. You need a high 2, buy signal bar, bull signal bar to enter. And before then, you could be gambling. Like something like this, you need Right, market's coming down, first entry, second entry, even that could be a problem. So we could go up here, form a trading range highs, and then come back down again. Then if you start to see bull bars and a gap bars above EMA, you can look for those gap bars to be tested. Okay, so that's a good one. Second entry, I did say that they're probably positioning themselves above 29. They dropped the order above 30 and they bought it. But the problem here is the SPAR. So if you are buying, you are committed to take profits. Say you bought right there, right? You're committed to take profits somewhere up here. Or you bought the close of 28, but then again, it's the same area. So you want market to get back up here, but it's not guaranteed that it will. Because then you have this strong breakout bar, right? Is if you actually apply what I would do, I would actually put a sell order rather than going long, okay? And look here, let me make that. Because you're in a downtrend, if you put a sell order at these levels, you have a better chance of actually scalping and then holding a runner to come down further, right? So we talked about this. I see a bar like this, big ATR bar, big average range, right? A bar like this will want follow through until it no longer can get any. So it's going to look for a leg one or two down. So instead of buying above a strong bull bar and getting trapped, why don't you put a sell order there and sell order there and sell order? And you get fill there, look how quickly you scalp. So that's what you would do. And where would be your target? Right down here. This would be your target, 85.50. And if the bears actually close a bear bar, they don't have to stop at the 85.50. They're going to bring it down to the 81.75. Perhaps even to measured move target 78 area, 77, 75, 78. But they need to close a bear bar below the 27 low. Then they will quickly come down to 85.50. If they fail to close, then you can sell again here. Say you didn't take any profit, you didn't scalp for a couple of points, and now you're nervous. Then you're going to wait for market to get to 50% of the SPAR or the 66. And because you're in a trading range and that makes up a huge leg in a trading range, it's a good way to measure. You could still enter as it comes down. You take profit, you exit out, right? You fix it, you exit out before market reaches the upper end of the trading range. So say that's 5 points, right? Say the market, I sold at the 33. I'm in a trading range, so I'm in a scalp mode, right? And I wasn't selling, I was flat. Market eventually came down about 5 points, right? It came all the way down here and then just move up. Even if in that 5 points you can grab 3, 4 points, that's a scalp. You don't know if it's going to close below the 0% or below the 27 bar, 27 low. So you take that. And if it accelerates like that, you have a runner. You can sell again here. You can sell again there. The only time you exit out of your short, when the bulls actually start to close above this, that's last resort. That's it. Because violating this upper third, we could pull right back up here very quickly, right? Because remember what I said. This right here is up, down, confusion, okay? Market is in a trading range. It needs to test a trading range low midpoint. So either that is here or here. Okay, so look what happened with the 50%. Did anybody sell there? Yes. Why? Because they sold at the 33%. Market came down here. They probably took profit because they're not sure if it's going to close a bear bar below 0%. They take profit. They leave a runner, and they're disappointed. They have another one somewhere in between. They're going to take a break even. And that's what that bar is about, 32. So how do I know this? Like, how do I read this so easily, right? I've seen it do the same thing over and over and over so long that it's just that I've learned to trust certain bars and their range measurements and where I should be entering with a limit order. Because everybody wants to trade a limit order market. More than, 80 to 90% of the time, market is in some kind of a trading range, right? Even if it just trends, look at the trend here. Like, we have bars with bunch of doji-like bars. So trend is not all that great, but it was wonderful here at some point. Then this happened, and this happened. Look at this breakout bar. It's got an upper wick and a lower wick. And then this happened. Okay, so there's a gap down open. It moved another, and then this happened. So the bulls are giving you a signal. They're giving you a warning that, hey, we're coming in the market, okay? We started to buy, and we might, show you some strong bear bars, but if we start to buy the second entry longs, even above strong bear bars, there's something that you need to pay attention, because market could be moving down, but only to reverse back up soon, okay? So, but bears are still in charge. No matter what I say, it's always in short, below the EMA. They kept there's a one tick, I'm looking at TradingView, I'm looking at Thinkorswim. There's a one tick gap there. So market is still trying to make its way down. Now, anybody who sold, still making money. If the bears close a bear bar, we're definitely going to test 85.50, but this is it. This is where they need to actually do it. Anybody who's selling with limit orders, 33%, 50% is scalping, but they still don't have a confirmation. They need another bar below this level, below 27 low, maybe even take that. Then we'll get to here. We might even get to here. If we fail to close another bear bar, this is the second time bears are trying to sell, then we reverse. I will buy that reversal, but I'm not ready yet. So I'm looking for bears to bring the market down to 85.50, 85 area, maybe violently break that area and come down to the minus 66%, which is 50, 81, 75, or just roll it to 82. Magnet is right there. Measured move is right there. 2 times the opening range breakout measured move is also down below. So I'm selling this. I had limit orders at these levels, and I want to see if we can actually tag this right here rather than making a market. Okay, we do have a ledge here now. No, it's not ledge, sorry. That's actually a double bottom higher low. That's a one tick high. That is a one tick high. 32 low is one tick higher than this double bottom. So are we actually reversing? Well, I'm not buying that. So I'm still holding into this area, and I want market to come down to here. If you want to learn more about this, this is recorded in many different sessions, and I did actually like half hour going through this. You can buy the past month's recorded sessions and watch. So that is the target right there. I'm still waiting for bears to get it. That's bar range measurement. So if the bar is too big, it's a good breakout bar. So basically what I'm looking for is a pullback, and I want to enter with limit entries, limit orders. That's the whole, like finding a good limit entry that I'm pinpointing exactly where it is rather than guessing. Because every tick counts in a trading range. So market continues to come down. It's a lot better and clearer, but doesn't matter. Look at this too, right? Eventually, like I said, these moves right here represent bulls buying already. So eventually they're going to start to show you bull flags and a reversal back up. So we might actually go right back up there, come back down. But if we create another bull flag, okay, maybe a double bottom or down on this, up on this, down on this, up on this, and down on this, that's a wedge. It's a weird one, but it is. So take it what it is. It's a flag. And I look for that high. And it's a flag, but how did it become a bull flag rather than selling and test these lows? Is what took place here? What do you see? I'm trying to draw your eyes to these micro patterns that you're going to keep seeing all over to spot a good reversal and jump into it without a fear. Who's going to tell me? The first person tells me what you see here after what has happened here correctly is going to get a free access to the best trades course from me. I'm giving you guys 3 minutes because it's very simple. Don't say it's a flag. Everybody knows that. I can see it. My grandmother from Graves can see this flag. I'm not asking for that. What has happened there that it break out like that? The first person gets it. Even remotely, like slightly mentions, I have mentioned it so many times, will get the course access to best trades. Okay, let me take a look. I gave you the hint is it's a pattern recognition, I said. This is the best I can do. Still nothing. People are like, just say failure of a failure is a swing. Actually, yes, you got it, Edward. Yes, failure of a failure is swing. But what kind of failure? Who's going to tell me? What sort of failure? Pattern recognition. What failure? No. I talked about this yesterday, the day before. I talked about market cycle following a market structure that is a footprint I talked about. I'm going to count to 10. If you fail to say this is over and the Edward gets it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Inverse cups failed. Cup 1 and cup 2 failed. We took out that high and then we're breaking out, baby. And probably the next one is going to fail because after a cup fails, you do not sell a strong one. You look for a reversal. You trap the bears because that is a bull flag. So Edward got very close to it because it's a failure of a failure, cup failure. So double top failure, double bottom failure, and then 2 consecutive bull bars. Stop goes underneath that first bull bar. Let me make it larger so you can see. Stop goes underneath that first bull bar. Stop entry order, long entry above 1 tick above. You look for 1R and you look for 2R. You exit out of the market before it's coming down with several legs. You do not sell this. You need to take profit at this high or that low closer. Then you're going to swing again because once you see something like this and the bears are not able to take out these lows, we're not going to come down here. Okay? I'm going to post a chart. It is not my charts. I downloaded from online. It's a great market cycle. Hold on. It's a great first study the market cycle in the course. Okay, and then go look at this pattern recognition and follow along. But let me find it first. Here we go. I can't take credit. I didn't create this. I found it, but I found back in 2008. I'm sorry, that's way behind. No, 2017, 18, when I first started to learn price action in the way that I wanted to trade as a day trader. I think it was maybe 2016. I can't remember, somewhere around there. But here, print this out and study this. okay, and couple that with L's market cycle, you'll never go wrong. See that double cup? It failed, and then they took it out. It goes up. Like you can take a look and okay. So who won this? Who did I say won? Who was the person? I completely forgotten. Hold on. Edward. Edward is like, oh no. But wait, this Edward? How many Edwards do we have? Edward is like, come on, man. Stop making me nervous. All right, Edward, I'm going to set you up. Send me your email address, okay, privately, and then I'll have Richard set it up for you. I cannot find your answer. Can you take a screenshot of your answer and send it to me also with your email? Oh, you do have the course. Oh, wait a minute. So if you have the, are we talking about the best trades course? I'm not talking about the Brooks price action. So you have the best trades course? Oh, okay. Then, all right. Then we don't have to do anything. Okay. All right. Are you in US, Edward? Do you need a book? I can send you a book instead. One of Elle's books. Do you have them too? It's like, I have everything. I don't need anything. I'm just looking for sympathy for my good answers. You have them too? Okay, good. Well, at least somebody got it. All right, we'll do this again. All right. I'll just, maybe next session on Monday, I'll come up with a good question. But seriously, if you have the access to course or the books, you know, books you can just, it's a tangible, you can gift it to someone. But if you have the access to course or anything, maybe just don't answer it. So somebody else gets it. Did anyone else set failure of a failure or inverse cup failure? I mean, I didn't see it, but if somebody said it, then I'd be happy to grant you access. I don't see it. Okay, let's get back to the price action. But you can also have access to this course. It's only like $68, $67, $69. I don't know, somewhere around the 60s. It is so inexpensive. It is a really good course. Elle and Richard did phenomenal job there. They actually talk about this. It's right there. Jonesy is actually posted. It's $69. It's no brainer. Just get it. It's really well structured and a long course. It really teaches you how to enter. It's really, really good. And at the end of the course, if you want to learn about order flow, Richard actually did a course about it. So if you have 60, just go look under the cushions, the couch. I'm sure there's some kind of $69 sitting somewhere you can just grab from the cookie jar. It really is nothing. I would recommend you guys to take it because Al literally is talking about how to buy and sell swing and scalps. And it's really, really good. All right, back. All right, so we reached the minus 33% and then we bounce, right? I'm going to get rid of this because there's just too much on the chart. We do have a wedge here. Remember, this was some kind of a tight bear channel. There's a wedge in there, kind of parabolic, but it bounced, right? Now we have a much bigger parabolic wedge there, right? So we are going to bounce eventually, but we might need to come down maybe another leg. We haven't really tagged here, nor here. But this is a warning for bears that the bulls might soon show up. So what do you have here? So here's the first entry, strong first entry. We made a new low. We have a wedge, and the bulls are looking to buy again. So we might need to go up. If we start to take out the higher lows, we made a lower low in price, Now, how do we trap? Let's talk about traps. What do we need? Well, we need a lower low in price. We actually, what do we need? What do we need? No, we have a higher high in price. So we have a higher high in price, right? Which we made, right? So we took that out. Then we come down, we make a lower low in price. Okay, what do I need? I now need bulls to show up. So I don't want to see bears actually take out the 32 low. If they do take out the 32 low, then market is not ready to buy and swing yet. But that swing is coming, whether it's 10 point or 20 point. Maybe it's going to be a midday reversal with bar 40. Maybe we need to wait for that, okay? But technically, this is now 24, 34, right? So that is 10, 24, that's 10. 34 is 20. That's technically a 20 bar gapping to the EMA. We are going to reverse back to the EMA. And there might be sellers at the EMA, above the EMA, since this is possibly a trading range now, they are going to show up. So, and the moving averages are getting closer to one another, okay? So that means we're going to go sideways and up soon, all right? But to do that, we have to start closing bull bars. So we need small flags to be forming. However, if the bears take out the 33 low, then there's nothing to buy here. You're just going to have to wait until market to reach here, somewhere here, and then buy. I was really wanting to give one of you a course today, you know. Can you guys please pay attention to the things that I point out? Maybe write it down. If Richard is listening, he's probably, oh, great. They missed their chance. I'm not giving anybody free access. I mean, he just made it as free as possible. Where is such a course from L. Brooks? People of, you know, like L. Brooks, $69. I don't know. You'll love it. If you do get it, you'll love it. If you don't, then just wait for one of these contests that I'll do again. All right, so what do we need here? Other than a bull flag? What needs to be formed before the bull flag? Inverse head and shoulders, right? So we have left shoulder, head, and possible right shoulder. I do not want to see bear bars closing below bar 28, okay, with a bear body. And if we keep that, then the last lower high is going to be the target, bar 31 high for bulls. Oh, Florian, great. Just tell Richard how you signed up. I'm sure he'll get a kick out of that one. He'll probably say, how hard was the contest? What did you ask them? Oh, great. Excellent. Who else signed up other than 2? Oh, wow. 3 people signed up already? Oh my gosh, that's great. You guys are going to love it. It really is a good, I mean, it's just, you're not going to be able to, like, you're going to start and you're never going to be able to walk away. It's really good. Here we go. Inverse head and shoulders. Bulls are trying to get to the inner small trading range highs, 31, bar 31 highs possibly. So what we're going to do is possibly get back up here even. But first here, I want to see this area to be tested. Now we have 34, we have more than 20 bar gapping to the EMA. There could be sellers at the EMA or above the EMA. So if you're buying here, I think market is trying to reach a little bit higher, but it is a small trading range, and patterns can fail because this is still a bear channel down. See, it's failing. What if they take out right here? Then that's it. If they take out the 28 low with a bear bar, then that's it. Bears are going to continue to sell further down lower. So I want to then see this area tested. So they failed. So I want to see now continuation. Okay. So I wanted to buy, but then I stopped myself. I can't buy it. It's already, I'm too late to buy. The only problem here is this trading range right here, trading range highs, right? Small trading range. And I needed to see follow through bars. You're still always in short. If you're looking to buy, that's a counter trend. I wanted to see, okay, buy and test, but I was also prepared there could be sellers right at the EMA. So there's not much of a room to buy and do anything. I also did not sell because this is not a good sell signal bar. Now, some bears are selling the close of strong bull bars, but it's very difficult for me to say that market is going to sell there. I don't know. I want to buy. I want to buy, but market needs to continue to come down. Okay, so now bears who are selling, making money. Whatever happened to these inverse head and shoulders, like any pattern, it will fail. It's coming down. So then you have maybe complex leg one. Well, that would be really weird to count, but still. Maybe we have complex leg two, maybe pull back. Can we sell all day today, sell every pullback, sell, 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 and finally, end of the day, we actually reverse? Yeah, this can keep selling. I think it's still trying to come down to this area, 76.75. And like I said earlier, this area I marked pre-market is very important. We can actually breach below this buy zone and then trap the bears and then buy. So I don't know. There is a wedge here. There's a spike, pullback, 1, 2, 3, wedge bottom. We are kind of testing this area, but we have a magnet, which is this moving average. So I would still wait. Eventually, we will reverse, but if market is not ready to reverse, don't bother, right? Look, it's still coming down. It can keep coming down. Even if we reach the EMA with 2 legs, they could sell, and finally, towards the end of the day, we could start to make these, okay, bull flags and get above the EMA. But it's not yet there, so we still have 34, so 24.34. It's more than 20 bars gapping to the EMA. What about the bulls who bought here? Well, they scaled here. Look, they probably were long. Maybe they tried to scale at these lows. They failed. They might have scaled here. So they're looking for a good buy signal bar. Until they see it, no one's going to buy it. So this is still the target. 2R, opening range, target. So I'm going to wait. Maybe 40 bar 40 midday reversal could be a good reversal for us. Here's another one. Barely tagged, bypassed, keep selling, selling, selling. Finally, we start to reverse. Look, I thought maybe we were doing that inverse head and shoulders, but it failed. Okay, so we're getting this bar. We could get another chance, maybe down here, and then finally we could reverse. I don't know. We'll see. I just don't want to buy it. Yes, I bought here and I took profit, but let me read your question. So you bought around 22.23 with limit order with such a small pullback bear trend. How can it be more or less sure that there will be a pullback near the area? What would you do if there wasn't pullback that you were expecting? Well, there was, if you measure from here, market made is 20 points there, right? And then continue to come down about a little bit more. Well, let's see. You can either measure from there, but since then, that was actually very bullish, okay? Bar 12 was actually bullish. After a bull bar, you get that, I generally start to count from there. So that's basically 20 point, and then moved a little bit more, but could not add 5 to 6 points. So this is exhaustion. But really, what this was if you measured from here, it was actually 1.5. I think it was. Yeah, see that 1.5 target? And then it bounced. Or you could say, no, I don't want to measure here. I measured from this breakout 2 bars, and that was 2R. Okay, taking profit. So you buy, and then you can do a couple of things here. What do? You can measure, which is what I did. I measured from down here I measured about 10 points. And 10 point was right there. And if you remember, I said somewhere around, what is this, 51.01, it could go a little bit higher, right? But really my target was, let me put this aside, there is a outside, inside, breakout, failure. So I measured this. Remember I said outside, inside, we're finally breaking. So I'm measuring the outside, inside combo, which is the outside bar. And I keep saying bulls can trap the bears, okay, after, look, they actually broke this low with this bar. It quickly came down, but where is the follow through? There's no follow through. We're now taking that high. Remember I said there might be some sellers here, but if we don't have, we're going to go up here. We close above this line. I even put a line there. 98, I bought here. I scalped around 98. It was actually 97.75. And I kept hold a runner into this. Why that? Well, look, it is the target. See that? Look. They're not getting breakout above that to get to here. That's it. You take profit there. And that was 51.01. I said maybe we could go up to here or the EMA, but be prepared that we're going to go to the EMA, but if we cannot test the EMA, if the bears keep the gap open, they can sell. So to me, I mean, I had plenty. I think I bought around here. So I took profit around 50. It was right there. That was more than 5 points. That is a scalp that you want. Okay, it's this kind of scalp, but it's with signs, like you read the signs, right? You have an outside, inside, they're selling, but where's the follow through? Then you get this bar. It's not an outside up bar to say that we're definitely getting above the EMA. So I'm always expecting, this is not an outside up bar. It is a strong bar, but its low is not lower than, actually it is outside. I'm sorry, I'm wrong. It is outside up bar. So it is low is exactly at the low of 23. So that is, you can even buy one tick above that. You can buy to close. You can just buy. Target is the EMA. The problem here is that I'm buying against a channel, bear channel, and the bear channel highs are right there, probably sellers waiting. So I'm measuring what I can take, right? So I took profit in here in case they would sell again. They didn't. So they breached this with a bull bar. Okay, so I said, we're going to go up to here. We're going to go to here. And then somewhere around EMA, I have to take profit because sellers are waiting. To me, there was at least a 5 points. I got a lot more than 5 points. So it was a good trade. Now, you're saying, what if it didn't go? Well, I don't know. I mean, to me, market was saying it wants to go because these guys made money, 2R, 1.5R. These guys made 2R. So I know there will be a profit taken. It's going to reverse. I'm also counting, okay, 20 points, and I'm looking to see if the follow through will add another 5 points close, bear close. But I'm really looking for 6 points. Then I would never have bought it. I would have expected more to downside, 10 points to reach after 20 points. So that will be 30 points. But they couldn't do it. It reversed. It was only 4 something points, and they couldn't close beyond 5. So that's it. Then the bear trend is over. We're going to pull back. Decent amount, could be 10 points. So now bears selling, measuring from there, right? They reached just about 20 points. Doesn't need to be 20 points. It could be 19 points as early as profit taken. They reached 19, but it can easily come down to 20. But the reason why you got this bar 38 is because machines now, starting from 19 point, they need to start taking profit if they're bearish. So you get that pullback. But other bears are like, forget that. We're going to keep selling this because this is a strong breakout bar. There's a 20-point ripe waiting there and the EMA. So they can still sell this. All right. I'm not ready to buy anything. I'm still waiting. Market could continue to sell in here. This is endless sell. Okay. It's not small pullback bear trend, but it could continue to sell if bar 40 does not reverse. Now, what do we have here? Well, let's count, right? You had a wedge here. Reversal failed. We took out the low. So we have a new wedge count starting with bar 27. Leg 1, pullback. Leg 2, pullback. Leg 3. Are we ready to reverse this? We have a really nice inside bar here, bar 38. There are probably buyers already above that bar, positioning themselves, okay, to go long. So they're looking for bar 39 to move above it so that they can buy, okay? So they're waiting with the buy stop orders. My only problem there, and put this back on, my only problem there is that this bar 37 is just too strong. I do not want to buy against it. So I'm going to wait for a second entry long after market making a new low with 37. So I'm going to have to be patient and wait for market to show me that entry, which is a higher probability trader's equation to go long. So you now have an outside bar followed by an inside bar, 38. You can measure the 37 range and look to see if the bulls can actually trap the bears underneath 37 and give you a good bull bar so you can go and scalp the high of 37. And if they keep closing bull bars, you can stay in your long and look for those breakout targets that I measured with this inside bar. Where was that? Bar 20. And the same thing happened with bar 28, right? Is nothing closed bearish below bar 28. What do you think has happened there? That's right. So they trapped, went back up, right? They probably reached some kind of a target there and then reversed back down. Still nothing is closing below that outside bar's range, bearish enough to sell. This is the second attempt. Bulls are trapping the bears underneath the outside bar followed by an inside bar. They're buying and scalping. Also, nothing is closing above the outside bar's high with a bull body to say that this is going to reverse. So you have to exit out, right? And finally, bears sold. Now they can sell. They can still take out the 37 low and come down more before finally reversing. So this is a bear day today, and it's basically, if you actually go to the line chart, you'll see that the market is making gaps. There's a huge gap here. We will eventually go back and test it. There's a gap here. I don't know what that is. I guess there's a gap there. There's a gap here. So before bulls take out these gaps, before they close it, you do not buy. You do not want to be the first to the party. So wait, at least these gaps are broken, okay, that we close above them. So it's going to show up as a double bottom neckline, pull back, and then go long. Until then, you have measured move target here. So anybody sold here, right? Failure over failure is swing. Double top failure, double bottom failure, right? Is someone bought this with a stop underneath. Whatever happened to them is they got kicked out. They just bought one tick above. You always enter with stop entry with this setup. Okay, you're looking for a reversal back up. Problem here is that you're in a trading range, and trading range highs are problem, right? They're resistance. Then this happened. They kick you out already. What do? Is you do nothing. Now the bears are closing a bear bar. What do? You wait. You can wait. You can put a sell order here. One tick underneath. We only buy and sell in failure over failure swing setups with stop entries. I've talked about this. This is a technique that I developed a long time ago by reading Al's course, and I also watched Ali Afshari's one of his webinars from last Orlando event, and it just dawned on me. I'm like, oh, I know what these guys are doing. I just need to automate this, and that's how I automate it. A failure over failure. Here's another failure. Failure is, oh, look, another failure. But I said, be careful here. This is a 5 reversals. After 5 reversals, we have 5 or more reversals. TR open. We are going to get a swing. There's a chart you can download. Okay. I'll prepare the chart for this, right? It's in the course. Anyway, so we go test the 50% of this trading range, and sellers showed up. You either sell here or you sell there. So, and you look for 1 hour, 2 hours. So anybody sold there with a stop there, they're already trailing their stops. It's above a major lower high, which is right there, because we took out this low. So this is the major lower high. They are still swinging this further down. They want more for their targets, okay, for their short trade. So let's put it on the chart then. You sold this, stop above, right? Market can come down to the 3R right there. Or if you entered late, there's a setup right there. 2 bars is stop goes right there. You do not need to put the stop there. Stop goes right there. We're at the 4R, 3. 1, 2, 3. Market could get the 4R. So that 4R is similar to if you measure with 9 and 10. I don't know if we're going to get there, but we're at a gap area, and we just closed this gap. Can market come down a little bit more? Is there something I can buy? Not yet. We do have a wedge. We do have a lower low. Can we get a trend reversal? This is bar 40. This is where I start to get, okay, I really want to buy now because we're testing the measured move. I'm sorry, it's closer to measured move, but we're testing the moving average. I'm looking for a good second entry long. We made a new low. So this is a lower low. We made, how many pushes we made? So here is 1, 2, 3, or 1, 2, 3, okay, maybe 4. Wedges can have 4 pushes. That will be exhaustion, and we finally reverse. I don't have a good bar to buy here, so I'm not ready to buy. I'm not saying 11. I didn't say why sell at 11. I didn't say 11. I said 12 or 13. Bar 12 is a really good sell signal bar. The only problem with that, it's right at the EMA. So you can enter late. I mean, if you want to enter with bar 14, sure. Then your stop is there, and you just got a 2R. And the market is going sideways because they're taking profit. Depending on my criteria is 2 bars. So I'm measuring what machines see, okay? Machines will enter early. They're going to put a stop order here. They're going to trail it underneath 11 until they enter. Bar 13 enters you. That's the earliest entry. But if you enter with bar 14, fine. Then count from there. That's your 2R. I am done with my session, everyone. So I would recommend you to go to the encyclopedia, gap up, look for slide 314 is, what about selling all day? Right, so can we get a outside down day today? True outside down day. Well, we went above yesterday's high. In order for it to be outside down day, we have to take out this. What if this is an almost outside down day, right? So let's find out. See, you see this bar right here? Yesterday's low is, and it just goes up, is, well, this is, how can this be almost outside down? This is an outside down. Oh, maybe it just went and closed inside. Then it became outside down. Okay, it failed here and then became outside down. I get it. So, but we're far from. Yeah, look, is it comes to the yesterday's low is, and then reverses. We don't have to go all the way to yesterday's low, but I prefer market to keep selling. So then we can look for a really good reversal. But this is bar 40, so its midday reversal is always expected. However, if market goes up to the EMA, there will be sellers waiting at the EMA. Notice how the 5-minute EMA and the 1-hour EMA is come very close to one another, and probably it's going to go sideways. So that means trading range is, if we go above it, a good bull bar, they will sell. A good bear bar, they will buy, but it could keep selling and selling and selling. Finally, we could reverse. So what about the reversal? Actual reversal. We do have a wedge, lower low. Can we get a major trend reversal right here? Maybe. But first, it needs to go up to the EMA, maybe above the EMA. I'm going to look for sellers somewhere from there to there. So I'm looking for this area to be tested. It's kind of a leg in a trading range. So I think it's trying to go is outside up, outside down bar 37 and inside bar. It's trying to test the 37 highs, the upper third of 37, which starts around 91 and it goes up to 91.75 is the sell zone. So we might need to test there. Starting with actually 90.75 goes to 91.75. Oh no, I'm sorry, I'm actually measuring wrong. Sorry. We're already testing the limit sell area, which is right here. So some bears are trying to sell here, but this is a very strong bull bar. We're probably going to test the EMA and above the EMA. I think market wants to test the high of 37, maybe a little bit higher, but the sellers could be waiting there. So it could go and test, if bears cannot sell here, 91.75, possibly 92.50 above. It could sell, I mean, right there. But we are in an area where bears are stuck in here. They're trying to sell in the limit area, which is the upper third. But who's going to sell against this? I think it's better to let the bulls get to the EMA and then somewhere above bar 37, somewhere here, look for a really good bull close and see if they actually can sell that and bring it halfway down, and then bulls start to buy again with a second leg up. So I think it's trying to go up to 91.75, 91.50, 91.75, 92.50. All right, I am going to end this session. I stayed way too long. I haven't taken any questions, though. I just forgot about it. So let me open the question box, and I'll take a quick question, and then I'll go. So can you look at this as a failure to break Global channel. You asked the question around 10:30. I don't know how you got this question in. The question box was closed. There must be a glitch. I'm not sure if this is, okay, that person is no longer here. See, he submitted a question around 10:30 a.m., but the question box was closed. So I'm not sure. I noticed this. People can actually leave a question when the box is actually closed, or you can't. So there must be a way, but I don't know how. But that person's gone. So next question, can you show how to create a fib retracement and measurement move indicators? Yeah, sure. Hold on, guys. Something happened here. All right, excellent. All right, so we just reached my target and the top of the trading range. Can bulls actually reverse this? How far they can go? Well, you can do one thing. Here's a fib, but it really is not fib. You're looking for, this is a 33% pullback, and this is the 50% pullback. I think that's where the market is trying to go, and we could get rejected right there if they can make it manage it. But there's a trading range high. I've already scalped here, but the bulls can continue to push this if they wanted to. They just need to tag 93.75 and close above. They can certainly reach 96, 97, and then come down. Okay, so here's how you do it. So here is the Fibonacci retracement. Okay, there are videos on Ninja Trader YouTube channel. You just double click, and then here you set your levels, right? You can add levels, you can remove levels, you can edit the levels, you can give them color, style, okay? And then what you do is you close it, and then you do template, save, whatever the name you want to give. You can make it a default, so every time you use it, it opens that template, okay? You can save it as a default, then that's the default will be applied, that template. Or you can name it, save it with a name. Then say you have several different templates. You draw the default, then you double click, you go to the template, you load, you select what you want to load, hit load, and that's the one that is applied. I think it's still trying to get there. So we're in an area where market actually can reverse, but here's what seems to be happening. Well, it's kind of reversing. So it's trying to get back up to this area. We could get a double top with that high at the EMA and then sell again. See this gap? Bears who closed this gap barely. See, I would not have sold this. Look what happened there. You see this gap right here? Which bar closed the gap? This bar didn't. It failed, right? This bar did. So if you put a sell order there and you sell, I'm afraid you're not going to go too far. This is bullish. This is where a lot of the sellers get trapped when they sell. I don't like to do that. I rather to buy. Look, now, look what they're going to do is they're going to probably buy that close, put a stop here, and they're going to try to reach there. Watch. If you are a bull, put your stop right there. That's your 1 hour, that's your 2 hour. So they will at least try to get to 1 hour on the 15-minute. Even if it comes down, there will be buyers probably here. But you do not want your stop to get hit. You don't need to put the stop here. You can put the stop here. Let's see if we can get that 1 hour. What if they hit your stop? Well, it's a manageable small stop. It's not like here, because if the bears actually close the stop or close onto the stop, then this isn't buying and they want to keep coming down. You can sell with them. But I keep the stop risk small because reward is big, right? So I have a reward right there, 2R. That's what I want. But if they come down and hit my stop right there, then I have to say, look, this is a downtrend. I might be buying too early, and this is an outside up bar within a trading range. I already bought down here sold up there, right, took profit. I did say you needed to take profit. I could be very well wrong on the swing, but as long as this 50% holds it, or the 50% of this gap area holds it, then I should be okay, and we should get this target. I don't like to take large, wide stops. Like this would be too big, right? So if you put your stop here, look how much you're risking, right? I don't want market to come down here and tell me, hey, dummy, you were wrong, right? I want to be wrong somewhere near where the gap is, again, closed by the bears and exit out with a smaller risk. Then I can sell and make that money back as market moves down to these lows. But as far as I'm concerned, this is bullish, and this is where the market is trying to go, and that is 99. Okay, so Al mentioned 2-minute scalp on 10 EMA. Do you have any comments? Because most of the time you scalp 5-minute. Yeah, you can use, we went over this. There are actually 2 videos. If you go to the Brooks trading course and website and on the block area, let's see if I can show you. Actually, no, I am right. Hold on, let me show you. Here, just type scalping. Well, it hasn't loaded. Okay, what just happened there? Okay, so scalping serious, right? Scalping serious. These 2, 1 and 2, watch these videos. They're also under the bonus section of the course, so you can get them there. But first read this, and then watch the video. It's a really good way. This is where L is talking about. So there's 1 and there's 2, okay? And I believe he talks about the 2-minute chart, and you can use 10 EMA and 20 EMA. I can't really demonstrate that right now, but I have rules to trade that, and I do pretty good with it. If the 10 EMA is below 20 EMA, you always look to sell, not look to buy. You can look for wedges and buy the reversals, extremes from gap down from the 10 and 20 EMA, and look for a pullback to the moving averages. Otherwise, I only buy once 10 EMA moves above 20 EMA and I have strong bull closes right from the EMA. I will enter 1 tick above those bars as close as possible to the moving averages with a stop order. You can also buy the pullback with a limit order once the 10 EMA moves above 20 EMA. So those are the things that Al already talks about, and he actually went over it in one of his live webinars back in, I don't know, when was that? 2022, 2021? Like, he literally go through that several times, explaining how he would trade a 2-minute chart. It's kind of easy, but you're trying to get in as close as possible to any short trade near the EMAs, as long as 10 EMA is below the 20 EMA. Okay, I am done with my session, y'all. So you all have a great day. I will see you guys next week, Monday. Tomorrow is Tim Stout, I believe. Just be safe. I'm going for this 1 hour. I already bought it. My stop is here. I'm going for this. Possibly even up to here, but there's possible double top there that we might pull back, but I'm more interested in 99. I'm buying it like it's 1999. All right. I know, it was cheesy. Yeah, that's it. So let's see if we can get that 99. I'm 1 tick underneath that. Looking for a breakout. Just want to see if I can get it. Maybe I'm wrong. Yeah, 99. Okay. Now, if you measure the today's entire range, I did say that we're going to go and test the 33% pullback. Now, in order for us to go higher, we need to close a bull bar above this. And the market can do that. It just needs to close above this, okay? Higher time frame, that's still the target. I did say on the 60-minute chart, if we break the mid-range of last week's range, which is this dash gold line, we're going to pull back to the moving averages 50 and 20, which we did, and we're kind of bouncing. But let's see if bulls can actually close a bull bar. Bears trying to get a low 2 from above EMA, but I think we need to go up, okay, before selling again. When would that be? That could be around 1:30 p.m. So it might pull back, but I think we need to go up here before selling. So this is bar 43, 44, 45, 46, 47, 48. Around 1:30 p.m. we could get that 6 bars minimum. Then we could reverse, or 12 to 16 bars, we take out that low and we're swinging yet once again. Okay, so why would that happen? Why would market resume the bear trend? Well, the bears were doing great, and then this happened. It's a warning, and then these happening. All of these beautiful bear bars, bulls are moving up. So the bears are exhausted. They are exhausted. They are frustrated, okay? But they could allow market to rally. It will be a deep pullback for them to sell again, okay? So they might be allowing bulls to buy as you buy, expecting a huge reversal. I don't know if market would reverse here. I mean, we could go up there, but they can reverse right back down and resume the trend. So what do you need to look for then? Then you need to wait for until bar 48 or 50, market to give you maybe leg 1, leg 2, leg 3, double top lower high, and start to come down. Now you take profit with the 6th bar down, expect a reversal, okay, higher low, then you can say, hey, market could go high, maybe back to here, maybe makes a new high, I don't know. But if that 6th bar pulls back and keeps selling and closes this gap right here, it closes this gap with bear bars, okay, then you can sell and expect average 12 to 16 bars or 24 bars moving, swinging down before reversing at the end of the day. I'm still holding in this long. I bought it into this, okay? So I am now going to scalp up there. Could go higher, 1.5 to 2 R, but I'm more interested in scalping here and see what happens later. Okay. Take care, everybody. Bye.